think it was Wall Street Journal that used to do this thing back in the day where they used to bet against a monkey, where a monkey would throw darts at a stock.
I love this already.
And they would compare what the monkey picked against traders.
This really happened?
This really happened. Look it up on Google. And so the monkey obviously had no financial education. It just literally threw darts at these companies. It would hold on to it for, I think it was a 10-year span, or it was a long-term thing, compared it against these massive traders. Guess who won? Not the traders, the monkey.
Oh my God.
And it just shows
Can we turn that into a t-shirt? That feels like a t-shirt. This is so hilarious.
It's reality.
But it's really important for people to understand. A monkey outperformed professional traders?
Professional traders.
I'm going to have to look this up.
Look
this
it up.
is way too important.
This is the reality where it's just the value of owning an investment for the long term. And it, like you said, that short richness is loud. It's flashy. Everyone talks about, oh my God, I doubled my money in this meme stock. Oh my God, I made so much money here. It's loud and it's flashy, but that's also fleeting. It's the first
also
to come,
how
the
you
fast to go.
lose money. Where it's like, yeah, you gained all that money, but then you lost it all.
Exactly. But the real wealth, real, true, sustainable wealth is built in silence. It's quiet because it just keeps happening in slow increments over time. And now you start to build this, there's that snowball analogy where I'm from Michigan, right? We have snow there. You start by building a small snowball like this, you put it on the ground and you start rolling it. In the beginning, you got to roll it a lot because you have this much surface area to pick up as much snow as you can. As it gets bigger, it grows faster because now you have all the surface area that can pick up more snow. So you roll it and it picks up more snow and gets faster and bigger and faster and bigger and faster and bigger. And before you know it, now you can have a massive pile of snow. But the initial one is the hardest because you're starting with $100. And you're like, what's $100 going to do? But if you stay consistent with the $100, and if you make more money, you keep putting more money in, and you just stay consistent, letting the $100 grow, then you put in another $100. Now the first $100 is growing, and then you add in another $100, and then you add in another $100. Now the first $100 has grown, hopefully. The second $100 has grown, hopefully. Now you add in another $100 to grow, and you just keep doing that, month after month after month after month. Now you're really starting to build a snowball that's growing and growing, and if you look at this not month after month, but year over year, that's when you really start to see the returns. But the problem is, who wants to wait that long? Nobody wants to wait 10 years, 20 years, 30 years, because we're thinking about, when can I buy my Lamborghini tomorrow? How can I buy my Lamborghini next year? How can I have the nice stuff now? And this then becomes a different question. We're turning to these long-term investment vehicles to make us rich next month, as opposed to actually doing what it's supposed to do, which is make us rich over the long term. We're trying to do it the wrong way. So now we got to flip the question. If these types of investments are there to make us rich for the long term, how can we make more money today? And so this is where people turn to things like trading. Oh, I can flip these stocks, I can flip these houses, I can do whatever to try to make a lot of money right now. And for some, it might work in the short term, but it is very difficult over the long term. And this goes back to what you were saying regarding something like entrepreneurship. This is more of an income issue because now we're trying to create an income through trading. Now, if you are a full-time trader, you have the systems, you have the tools, this is all you do, maybe it works for you. But for the vast majority of regular people, it is not going to work. And this is where now something like, just like entrepreneurship, it's not going to work for the majority of people. Majority of people are not meant to be entrepreneurs, but you have to start asking the question of, how can you increase your income if you want to have that better lifestyle? But now, I want to caution that a little bit more too, because we talked in our previous interview about building systems, how to become financially smart. This is where now one of the simplest, not easiest, but simplest ways to become wealthier faster is when you increase your income to not increase your expenses. And so the best way for me to give an example of this is if you ask the majority of people, what's causing your financial issues? The majority of people are going to say it's an income problem. If I just made an extra $10,000, I'd be able to put money aside for my investments. I'll be able to do this. I'll be able to do that. I'll be able to do so many other things. But what data has showed us is for the vast majority of these people is when you make that extra money, what happens? Your expenses go up right with your income. Now you got to buy a new car that matches your new income. You got to go on a vacation. You got to celebrate. You got to go out. You got to live this lifestyle that matches your income. So instead of doing that, create a system that flows no matter how much money you're making. And one of the simplest things that you can do is follow something like a 75-15-10 plan, which means that for every dollar that you earn from now on, 75 cents is the maximum you can spend. 15 cents is the minimum that you're investing, putting aside for investments. 10 cents is the minimum that you're putting aside for your savings. So now whether you're making 40 grand a year or $4 million a year, it doesn't matter. You're still following the same system where it's just a percentage based off how much money you're earning. And the only thing that you're going to change is your savings, because you don't want to save your money forever. You want to save your money for 3 reasons. Save your money for an emergency, save your money for a big purchase, like you want to buy a home or a car, or save your money for an investment. If you're not saving your money for one of these 3 reasons, don't be saving your money. Now, when we talk about saving your money for an emergency...
That's a bold statement.
Yeah.
That's a bold statement.
There's no other reason to save your money, because now you're just saving your money.
We're going to have to get into inflation, otherwise people are going to derail. But I also, let's start there. So why not save? That's all I was taught as a kid. Save, save, save.
Me too. So I grew up in a traditional Indian house where the whole idea of plan and becoming wealth, this is from me, was become a doctor. Why? Because doctors have a big status and doctors have a big salary. Now, when you make this big salary, what is the plan to become wealthy? Not by investing, not by doing some fancy stuff. It's by saving your money. Have a big bank account. So live small, live off of ideally 20 to 30% of your income, save the other 70%. And that might sound extreme, but this is the reality of what a healthy financial household looks like for an Indian doctor.
Was it for emergencies? Like what is the
Just
purpose
save it.
of saving? In that particular mindset.
So it's not for emergencies. It's literally just to build up a big savings account.
To
It's
pass on to
become
your
wealthy.
kids?
To pass on, to build wealth. So
Like
I
to
think
be wealthy and live in a shoebox, like what is there, like, are they ever articulating why you're doing it? Like if I'd pressed her, what would she have said? You never know when you're going to need it. That's the only way to get rich. She would have said something like that. But if
Yeah.
I had then pushed farther and said, okay, what's the point of being rich? Well, then you can do this, that, and the other. Well, not
Yeah.
if I'm saving forever. I can't.
So I think it has to do with the times that somebody grew up in. So this save heavy culture is a big byproduct of my parents' culture. People who grew up, were born in the 60s, especially in India. So now if you look at that time frame, where you look at before 1970 in India, it was a very tough time where poverty was very common. Most people were poor.
See, that I get. That's a protection against,
And it was
I don't
protection.
ever want to be hungry. I don't
that
want my
culture-
kids to
and
be
s-
hungry.
But that mindset hasn't gone away. And so it just kind of trickles down, right? You see what you know. Because I personally, many of my friends are doctors. Many of my friends make a lot of money. Many of these people also have 0 investments and have huge bank accounts, because then you're beaten away from this idea of doing something risky like investing your money. Investing your money is dangerous. It's bad. Like when I wanted to invest in real estate, nobody in my family had ever heard of this concept of real estate investing. Neither had I. Nobody I knew was an investor. So I told my dad, Dad, I want to invest in real estate. I found this condo for $8,000. I want to rent it out, blah, 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 blah. My dad's response was, you are stupid. Go become a doctor. Go do something worthwhile. And, he said it out of love. I love my dad. But
What, did he really say worthwhile?
yeah. Now, the reason why my dad said was that extreme about it is, Indian parents have this thing where they like to create stories to scare someone away from doing
Don't we
something.
all?
And so, his whole thing was, what happens if your tenant doesn't pay you? What happens if you go to your tenant's door and then they shoot you because they don't want to pay you?
That escalated quickly.
This was the example that he gave me. And so it's just you start creating all these fears where it's like, if you invest in real estate, you might die. And that's
Okay,
supposed to
aggressive.
scare you from not doing it. It's one of those things where it's this lack of financial education, lack of ever experiencing it, because you don't know that it's possible. You don't know anybody doing it. You don't know anybody that looks like you doing it. You're still new in this country. How are you supposed to go and do it? It's just very scary, where this is the safe thing is just saving money. If you save 100 grand today and you look at your bank account a year from now, it's still going to be 100 grand. Maybe a couple extra pennies if your bank is giving you some interest, but that's it. If you invest
So
100
why
grand,
isn't that the best idea ever?
Well, going back to what you said, inflation. Inflation, by definition, is diluting the buying power of your dollar. So, what
I
is
thought
it?
this was a fundamental law of nature.
Let's
It's really human intervention.
it really is. Inflation comes from the word inflate. What are you inflating when you have inflation? And it's funny, if you've been watching some of your content or my content, you know that you're inflating the monetary supply. When you increase the amount of dollars out there without increasing the amount of wealth, the value of each individual dollar
You
goes
just
down.
broke brains. How do you increase money without increasing wealth?
So if I just print money, the Federal Reserve Bank, which is the central banking system of the United States, they have the ability to print money. They can increase the amount of physical dollars out there or increase the amount of currency through digital things. So the amount of money in circulation, they can increase this. And so if we go to a very basic example, if we live on a hypothetical world where there's me, you, and 3 other people, and each one of us 5, have $20 each, and that's it. We're each equally owners of 20% of this world's wealth. But what happens now if this new alien government comes in and then they magically gave us $20 more each? Are you going to be double as wealthy as you were before? You might feel like you are for a minute because you see, oh my God, I have $40. There's only $100 in this world. I have 40 now. And then you go and talk to your friends and you go shopping and then you realize, oh, everybody has $40. So now all of a sudden the price of anything you want to buy is going to be double because you've increased the amount of currency in this case without increasing the actual wealth. And so this is where you kind of have to differentiate currency from money because you have to kind of define what money is, because money can have a couple different definitions. It can be a store of value or it can be a means of exchange. And what I mean by that is money as a store of value. If you look at physical gold, for example, gold is your traditional store of value because it takes time, effort, and labor to mine physical gold. So that time, effort, and labor is represented through a physical gold bar, and that is the value, the physical gold. Now, if we compare that to something like our paper dollars, it's very easy to transact with. It's a very good means of exchange. Gold is difficult to transact with. If I wanted to go to McDonald's and buy something with some gold, it's going to be very hard to do that, versus with dollars, it's very easy to exchange. However, it can be easily manipulated because the Federal Reserve Bank can print money essentially on command. So they can increase the amount of dollars out there, which decreases the value of each individual dollar. So while our dollars serve as a very good means of exchange, it's not a very good store of value. This is where now what wealthy people do is they want real money. They want something that's not only going to store their value, but also hopefully increase in value. This is what assets do. If you look we hope, right? You invest in assets for the purpose of making money. How does it make money? By increasing the amount of value that it provides. When you invest in a company or an ETF or anything, you want to invest in something that you believe will be more valuable in the future. If you didn't believe that, you wouldn't put your money in there. How is it going to become more valuable? How is McDonald's or Amazon going to become more valuable? Their goal is to produce more value, to create something new that will provide more value to more customers, and then that value is represented through revenue, through profits, through money. So you're investing in something that you believe will produce more value. Same with real estate. You want to invest in an area that you believe will be a more desirable area. Because if you invest in an area where businesses are moving to, where people are moving to, where jobs are moving to, you own that land, you own that property, you own that building that is now more valuable because more people want to be here. And now that is represented through money, through this currency, where now more people want to be there. So now rents are higher, property values are higher.
This is why this stuff gets complicated and why people turn their brains off. Because, for instance, if you pick the wrong neighborhood, you can lose your ass.
Right.
And this is where ETFs, index funds, become very interesting. To use real estate as an example, I personally, because I recognize how ignorant I am, I would much rather be investing in a whole bunch of neighborhoods across not only this country, other countries, because I don't know which one's going to pop off.
Yeah.
Right? So because there is so much uncertainty, it's like as you spread that out now, but to your point, you're limiting your upside, but you're limiting your downside.
Right.
That to me is far wiser. You don't become the next Ray Dalio by doing that. So you're not going to turn into a billionaire. But when you think, like when Ray Dalio was pressed, like what would you do? Like if you could only leave a set of instructions to your kids about what to do with their money. You couldn't actively manage it for them. You couldn't have your company do it. You just had to give them instructions. And he came up with what he called the all-weather fund.
Yes.
And so it's just like, I don't know what's going to happen. So here's like the diversification that you should put it across, and you're not going to make as much money, but you're not going to lose a bunch of money either.
Exactly.
And so all of this stuff is so freakishly complicated that, even better, it is so easy to be wrong and so hard to be right that your odds of getting it right consistently enough, because it's to your point about the monkey, if you looked at it in 6 months, the monkey probably loses. You look at it in 12 months, monkey probably loses. 18 months probably loses. 2 years maybe loses. 3 years though, it starts to be like, all bets are off. And by the time you get to 10 years, it's like the monkey's winning. Just because you just left it alone. Instead of thinking that you could outsmart the scenario.
And Warren Buffett did a very similar bet against some major hedge funds on Wall Street. And what he bet, it was a $1 million bet, that the winner would give $1 million and then they would go to charity. And his bet was that the average person would be better off by investing their money into a low-cost index fund as opposed to actively managing their money, actively trading their money like the hedge funds were doing over the long term, over a 10-year period. And what happened was exactly what you said. In the beginning, the hedge funds were crushing the index fund. The index fund was down, hedge funds were going up because they were able to find these trades and make all this money in the short term. And the media was asking Warren Buffett, how do you feel about it? He said, the 10 years are not up yet. And then come year 10, well, then we had some swings on the market, some hedge funds had some losses, you took out their fees, which is also a big chunk of it. After factoring in the fees and all that other stuff, the index fund won. And what did he do? He just put his money into it, sat back and didn't do anything, versus the hedge funds are spending all their time managing the money, trying to beat the markets. And they did for a little bit, but then over the long term, they didn't. And then when you factor in their fees for spending all that time trying to beat the market, now your returns are less than if you just put your money into the market and didn't have to do a thing. And so this is that basic financial education where it's not as attractive. People want to be able to show off. Like, it's just like people would rather look rich than actually be rich. And you would say, oh, no, I would rather be rich. Well, people's actions speak louder than the words. Because if that's true, you should not have a Gucci belt if you don't have that same amount of money in the market. You should not own a BMW if you do not own any investment portfolio, right? I mean, it's just a matter of looking at what you do. Does it match with what you actually want? If you want to become wealthy, answer is yes. Okay, what are you willing to sacrifice? You have a BMW in the driveway, you got the Gucci belt, you have the Louis Vuitton. If you have this nice stuff, but you don't have the nice assets, your priorities are in the wrong place. And this is just a matter of you looking at yourself in the mirror and being honest with yourself and understanding what you want. And for a lot of people, maybe this is a matter of financial education, maybe this is a matter of preference, but many people would rather look rich than be rich. If you just look at, what it is. Now, if you dive a little bit deeper, are the people that want to actually be rich, we want to be rich today. We want to be rich tomorrow, not be rich in 5, 10 years. And so what does that do? It then drives your actions. So it's very difficult now to understand that, hey, I'm willing to sacrifice not only the nice stuff today, but then also not do the attractive, the sexy, the things that are hot, that are making people so much money today, because I believe in this long-term investment that has been time-tested, because it's so boring. But the reality is that boring is where the real wealth is built.
Dude, facts. I always tell people, boredom kills more entrepreneurs, kills more dreams than fear or failure. It's the daily grind. Like when, to your point about watching candles, when crypto was really popping off, I had to stop myself from watching it because it was so fun and so exciting. And I was like, you can't spend time there because I'm not going to want to watch it when it's down. So it's like, you want a system, you want to set it, you want to forget it. And if I could get people to understand the psychology of how money impacts you, like, oh my God, to your point about people would rather look rich than actually be rich, when you think about what money really does for you, you have to understand peak emotion. there's only so much emotional amplitude that you can have. In fact, do you have an image in your mind of the highest emotional amplitude moment of your life?
As where I felt the most emotion?
Yeah, the highest positive emotion you've ever felt.
Positive emotion.
Yeah,
That's a tough
positive for sure.
one. You know, it's funny. My wife used to get really upset at me because I never showed emotion. And she was like, "What's wrong with you? Like you never get excited, you never sad." I'm like, "Look, the only real emotion that I feel is hunger. I get hungry." I've changed since
That's
then.
what a woman wants to hear, by the way. If you said hungry for you, baby, that's the only thing I ever feel, you might have a shot.
Yeah, so
I just get hungry,
I've
yeah.
evolved since then. Where I'm working on that. But I think the happiest is really for me being around my family and the people closest to me and just laughing.
Yes.
That is my favorite thing in the world. Like
Yes.
what do I want? I literally want my friends and my family in one room and us just joking around because we make fun of each other and it's not in a mean way. It's just our personalities and we laugh and have fun. That is, if I could think of my favorite thing to do, it would be that. Maybe if you want to take it one step further, maybe do it on the beach. But it's honestly, it doesn't matter where we are. If we're in my basement eating some whatever pizza, some Indian food, and just laughing.
Yes. So now, I believe that to be true of what you're saying. It's certainly true of what I know in my life. So I have had the fascinating experience of I spend Christmas with my family and my wife's family together, and it's amazing. And I've done Christmases in middle class home and had an absolute ball. And I've done Christmases in a big fancy mansion and had an absolute ball. And while doing it in the big fancy mansion is fun, especially because other people, they don't get to do it very often. So like, oh my God, this is so cool. The peak emotion is not higher.
Yeah.
In fact, the highest amplitude emotion I've ever had is when I was in high school, I got cast in a professional play.
Oh, wow.
And that meant that I got to skip calculus. And dude, I was over the moon. I got paid to be in a play. It was like the craziest thing ever. I was like, I can't believe this is really happening. Now, I have had millions of dollars show up in my account like that. And I'm telling you, it was cool.
Yeah.
It was neat. But it wasn't as neat as getting cast in a professional play where I made $75 a week.
Yeah.
In high school, there's only so much amplitude of emotion you're ever going to experience. And I know no matter what I say to people, they're not going to believe me. They're going to have to go through the same fucking rigmarole. I'm not saying money isn't powerful. Money's incredible. I want to make more money because you can do incredible things with it.
Right.
I'm just saying that it doesn't touch fulfillment. It doesn't do the things for people that they want it to do.
Yeah.
And so the reason I say that is, okay, you're going to be bored doing it the right way. Mm-hmm. It isn't going to be sexy. You're not necessarily going to be able to flex. It's going to take decades, but it will work.
Right.
And it actually addresses the thing that money is good for, which is money problems.
Right.
And so there are really two paths before you. If you want to be an entrepreneur, like that is high risk, high potential reward, high potential failure. Mm-hmm. If you optimize your entrepreneurial journey for failure mode, and you're like, even in failure, I'm having a good time, you're going to hate failing, don't get me wrong. But like that I'm pursuing something that really matters to me. I'm getting better every day. I'm serving other people and myself. I'm increasing my skill set. Even if you're losing, that's going to be amazing if you're thoughtful about your mindset.
100%.
But if you're making all the money in the world and you're not able to laugh and play and have a good time and feel like you're doing something that matters, it won't matter. Like, this is where I want to like grab the camera and start biting it to get people to understand. Like, dude, set it and forget it. Make an income, work at something that matters.
Yeah.
If you want to be an entrepreneur, I love that. I can even help you do that well. Money isn't going to change how you feel about yourself.
100%.
It is not going to make laughter more joyful.
Right.
It isn't going to make human connection better.
Yeah.
It will get you on the occasional beach. But if people could internalize that, I think that they would make very different choices. They wouldn't be so worried about making all the money right now. In fact, let me ask you another question. What do you spend the most money on?
My business.
100%. What do I spend the most money on? My business. So it's like, it's not like I'm out
Yeah.
balling on, the beach. I could,
I know.
but that doesn't give you fulfillment.
I did a show. I was in New York last week, and I did a show there, and they were asking about the first time I made $1 million. And I went through that. I was like, you're not gonna like my answer, because the first time I made $1 million in a year, I think I took home 20,000.
Yeah.
Which
Just
is what I
shovel
made off
it
of.
right
I put
back into the
everything back into the business, because, I was like, I'm fine driving a $500 car. Like, I'm getting from point A to point B. I'm getting by just fine. Like, this is my fun, passion. And on your point of the fulfillment, this is what I call my quadrifit theory, where there's 4 aspects. Quadrifit. So what I say, my theory is, if you want to live a happy and fulfilled life, you have to be fit in 4 aspects of life. And think about it like a triangle. Where on the bottom of the triangle, you have to be physically fit, then mentally fit, then spiritually fit, and on the top, financially fit, if you want to live a fully fit life. Physically fit, because if you're on your deathbed, it doesn't matter if you have $10 million in the bank. The only thing you care about is being healthy again, to be able to breathe again. You want to be physically healthy, because if you are morbidly obese, you can't move, you're just, the only thing on your mind is to be healthy again. We all know that feeling where you're sick, you don't feel good, where you can't do anything. The only thing you want to do is feel better. Then is mental fitness, being around people that you love, not be miserable. If you're struggling with anxiety, depression, if you're not happy, more money is going to make you more miserable. And we all, I'm so passionate about this, because I've seen this firsthand. I used to not believe in this, but I have seen this so many times where I try to bang this into people's heads. If you think that making $1 million is going to suddenly make you happy, it's going to make people like you, it's going to make people want to be your friends, it's going to make you find the love of your life, you are so wrong. And you are so far from the truth that it's going to be extremely painful for you to learn it, because you have to work on this mental health as its own aspect of life. Learn how to build self-esteem, how to be happy, how to manage anxiety, how to manage and fight depression. Learn about these things. It's its own part of this. You have to be mentally fit. Then spiritually fit. Now, this doesn't have to mean religion. Spiritually fit, I mean finding your self-purpose. What are you waking up for every single day? Like you said, you've had millions of dollars hit your bank account. You don't got to go to work every single day. You don't got to go and hustle. Yet you do. Why? Because you see a bigger purpose for yourself. You have a reason for you to get out of bed. Because if you don't have a reason to get out of bed, more money is not going to do anything. You need to have a reason to get up, want to thrive, whether you have $10 or $10 million to want to hustle. And then at the top, this is where financial fitness has the most impact, the most power, and the most ability to allow you to live a more fulfilling life, because more money is just putting fuel on the fire. It gives you the ability to do more of the things that you love, to do more things that make you feel more fulfilled, to do more things that you want to do, to give back more, to do more of that. But having more money is not going to solve your physical fitness. Maybe it'll buy you better food or a better gym, but it's not going to give you the mindset to go to the gym. It's not going to make you feel okay when you're drinking something healthy. You're going to say, man, screw the smoothie, give me something nasty, give me some unhealthy food, right? It's mental fitness. More money is not going to fix that. More money is not going to give you a purpose in life. It is its own aspect of life. And this is where you have to understand that, work on all 4 of these. Each one of these requires its own attention, its own nurturing, its own thing. Like, I focus on the financial side because I feel like I understood that. But that's not the only aspect of life. And this is what I really try to hammer into, on my channel to the people that watch my videos is, look, money's great. Understand it, conquer it, understand how to master your money, but also understand that it's not the only aspect of your life. You got 3 other huge aspects where if you don't have money, it's going to ruin everything else. Because if you don't have money, you're struggling about your bills, you're struggling how you're going to pay for anything, you don't know how you're going to take your spouse on the vacation that he or she wants, you're not going to be able to pay for your kids' education, you're not going to be able to do the things that you want. But if you have money and you don't have these other 3 things, you're going to feel miserable. We're going to jump back into the video in just a second, but if you want to make better decisions with your money, you have to be aware of what's happening in the financial markets, and my free newsletter, Market Briefs, makes it very easy to do that, because every day my team is breaking down what's happening in the financial markets into a fun, easy to read and witty email. Even if you don't have a financial background, in less than 5 minutes every morning, not only are you going to be aware of what's happening in the financial markets, but you're going to actually look forward to reading these emails. There are thousands of financial news stories published every single day. It's impossible for anybody to keep up with all the things happening in the financial news. That's why my team is researching what's happening every day, and then they're breaking it down. That way you're aware of what's happening in things like the economy, the real estate market, the stock market, the cryptocurrency market, and the global economy. And the best part of Market Briefs, besides it being free and you being able to win a pair of our Market Briefs for free, you'll learn about that as soon as you sign up for Market Briefs, is that our newsletters are brief. You can read them in less than 5 minutes every morning. So if you want to join Market Briefs for free, I'll put the link to how you can join down in the description below. Did you sign up yet? There's the R word, recession, which when people hear that, it gives them anxiety, fear, panic, makes people scared because you think of layoffs, companies going down. A couple things that I want to mention regarding that is, the majority of people are very scared of slowdowns in the economy, slowdowns in the markets. However, for the minority of people, recessions, crashes are opportunity to build wealth. You can think of it almost like a Black Friday for investors. So the first point that I want to make regarding that is some people will use slowdowns as an opportunity to build immense amounts of wealth. More millionaires are made during recessions than any other time.
How do they do it?
So that's the thing. You want to find the opportunity. And the way that you find the opportunity is first to understand how you get there, because history doesn't repeat itself, but it does rhyme. And so what happens is people say, oh, this happened in 2020, so it must happen again. Or this happened in 2008, so this is probably going to happen. Or this happened in 2001. That's not how it works. You have to understand what happened and how you're getting to where you are right now. That way you can look for the new opportunity, because the opportunity is going to be similar but different. And you want to be ready when times are okay and good and prepared. That way when things go bad, you can come in and pounce on the opportunity and take advantage of it.
So you got the stock market, which is, looks like record lows. It seems like every week it just keeps going down. You've got the crypto market, which is in the NFT space, which just seems like it's going down and down, deeper into a hole. You've got the housing market, which seems like it's starting to take a turn and might pop in this bubble. Where is the biggest opportunity right now?
So let's talk about how we got here so you can see where the opportunity will be. So in the past, for the last number of decades, anytime you saw an economic slowdown, the response was to create inflation. The response was to stimulate. So go back to 2001. When the dot-com bubble burst, we saw interest rates get cut. There was stimulus by the Federal Reserve Bank. So anytime you inject more money into the economy, it creates inflation. Same thing happened in 2008. The 2008 real estate bubble burst. And then we saw a new quantitative easing. We saw cutting of interest rates. More money was injected into the economy. Same thing in 2020 on a much bigger level. 2008 was the largest quantitative easing in the history of time, and 2020 blew past that.
It was like 5-10 times more,
It was significantly more. And so what happens is when you create more money, it reduces the value of your dollars. This is what inflation is. Inflation comes from the word inflate. So what
we print a lot of money to put it into the economy, right? New money, which creates inflation, correct?
Right, and the value of your dollar goes down, causing the price of things to go up. So when 2020 happened, we started printing more money and injecting this into the stock market, into corporations, and into people in the form of stimulus checks and unemployment. So what did that do? Well, in 2020, we saw the fastest and most severe stock market crash in history. It exceeded the rate of the Great Depression.
Wow.
And then what happened? The Fed opened up the money printer and boom, shot right back up. It was the fastest stock market growth in the history of time. Which, if you think about that, we had the fastest stock market crash in the history of time, and then we had the fastest stock market recovery in the history of time. How is that possible? Well, we printed an insane amount of new money. And when that happened, we created something called unlimited quantitative easing, where they essentially just said that they would print and do whatever it takes to help recover markets. Well, when you start printing all of this money without producing more products, because now remember the world is shut down, what happens? We have people who have money and nothing is being produced. So now if you have money and you can buy stuff, but nothing's being produced, what's gonna happen? You start shopping and things get bought, and now all of a sudden companies can't keep producing the products that they had before. Now you start to create supply chain issues. So now this started creating supply chain issues, and then this caused the price of things to go up even more because now companies say, well, I don't have more mugs to sell you. I only have a few, so I'm gonna have to raise the price of these mugs. And now you start to go down this inflationary spiral because now that people need more money to buy things, they go to their boss and they say, hey, look, I need more money.
Right.
It's more expensive to survive. Then your boss pays you more money, hopefully. And then your company says, our costs have just gone up. People need more money. So what do we need to do? We need to charge more for our products. Now you charge more for your products, people need more money, it starts to create this spiral. So that was the issue that kind of led us to where we are now. And up until just a few months ago, inflation was supposedly transitory. It was supposedly this temporary thing that would just magically go away. But the interesting thing though, if we go into a little bit of data, I don't want to get too confusing, but the interesting thing though is there's really no clear answer as to how much money was created. We have ideas, but if you look at this thing called M1, which is the amount of money out there, you can go to Google, search Fed M1, they have a chart of it. And what you'll see is that in the beginning part of 2020, there was just under $4 trillion of money out there, M1. And then now, today, there's over $20 trillion out there in M1.
Of money, actual dollars.
Now, let me say, the reason why I'm saying it this way is because when the pandemic hit, the Fed started creating more money, but they also changed the definition of money. M1, which is the definition of money out there, as soon as it started opening and quantitative easing, they changed the definition of it. Why? Now, there's no real answer for this, but my guess would be that if people knew exactly how much money was printed by the Fed, then people would be more of an uproar of what's going on, because then they would see, holy cow, you're printing all this money, making businesses rich, making investors rich, making regular people poorer, because inflation disproportionately hurts the financially uneducated and the financially poor, because guess what? Now, your gas is more expensive, your groceries are more expensive, your rent is more expensive, but your wages aren't keeping up with it. Unless you had a 20% wage increase, your cost of living is probably outperforming your wages. So that's what's happening in terms of money. We had an insane amount of money printing being done. And in addition to that, we also saw interest rates get cut. What are interest rates and how does that have anything to do with inflation? Well, the Federal Reserve Bank is the Federal Reserve Bank. However, they're not federal. It says so on their website. They're not a reserve because they don't keep any cash reserves. And they're not a bank. You and I can't go there to deposit money or do any banking. So the Federal Reserve Bank, while it's not federal or reserve or a bank, they control our monetary supply. They control our money. There's two ways that they can do that. One is through interest rates and the other is through printing money. So through interest rates, they have the ability to raise and cut interest rates. When we are in a slowing economy, a recession, they cut interest rates to stimulate spending because our economy runs on spending. If I have $1,000 in my pocket and I go to Amazon and I spend this $1,000, well, Amazon has more money to hire more employees, invest in more infrastructure, do more things in the business. But if I keep that money in my pocket, they're not making as much money and they can't keep growing. So our economy runs on spending. And when you cut interest rates, spending goes up. When mortgage rates drop to 2.5%, people want to go and buy a home. People want to go out and buy more cars. People want to go out and spend money because it's not as expensive. And businesses do the same thing. Institutions are going to go out and borrow an insane amount of money because it's cheap. If I can borrow money, $100 million at 3% a year, and I can grow my company at 5% a year, I'm going to do that all day long, right? And that's what institutions did. So more money gets injected into the economy when interest rates are down. So that's what happens typically when you're in a recession. It creates more inflation, right? Because you're adding more money to the economy. However, it helps to stimulate the economy. Now, when you're in a growing economy and you want to cool down the economy, you want to cool down inflation, do the opposite. You start raising interest rates, making it more expensive to buy a home, making it more expensive to live. And then you also can, in this case, remove cash out of the economy. This is what the Fed is trying to do now.
How do you remove it out of the economy?
So the Fed is, well, interest rates and then their balance sheet. And I'll talk about interest rates first and I'll go into the balance sheet. So the Fed right now is raising interest rates because they want to slow down inflation. So when you raise interest rates, what happens? It's more expensive to buy a home now.
So less people buy.
Less people buy. less cash enters our economy, less institutions borrow money, less corporations borrow money. So borrowing goes down, less dollars enter our economy. The second side is the balance sheet. So this one's kind of interesting because you have to understand a little bit of how money works on the government side without going into politics. So the government is not a for-profit entity. They don't sell products for money, right? What they do is they get their money from tax dollars. People like you and me, right? We pay taxes and then the government spends money. So when the government spends less than what they bring in, no problem. Their tax dollars cover it and then they have a surplus in case one year they overspend.
Yeah.
But that's not what happens here. We spend more money than what we bring in. So that's why we have this national debt of $30 trillion, this national deficit. And so how do you cover that? Well, if you spend more money than what you bring in, you can do a few things. You can raise taxes, which is going to make people angry if your taxes go up. And so you can't always do that. Second is you can go out and you can borrow money. You can go and raise debt. So that's what the government does. They go borrow money from countries like China and Japan. But there's going to be a limit to how much money you can borrow. So if you can't borrow enough money from different countries, then what's left? Well, then you can issue something called a treasury bond, which is where now anybody, people like you and me, anybody listening to this can go and lend money to the United States government. But if the government is running a big deficit, meaning let's just say they need to raise $4 trillion, where are they going to get this money? Well, if they can't get that money from regular people, then they're going to call up the Fed and they're going to say, hey, Fed, we want to issue $3 trillion of treasury bonds. No one's going to buy it. Can you help us out? Now, remember, the Fed doesn't have cash piles sitting there. So what do? They print $3 trillion,
Jeez.
give it to the government. This money's created out of thin air. Now, the government has this $3 trillion. Inflation just happened. And then the government is able to now spend this money without any sort of taxation. However, you still pay the price. The most expensive kind of money that there is free money. Because now when the government gets this money for free out of thin air, everybody pays the price. And the person who pays the price disproportionately are the poor and the financially uneducated, because now you have to pay for inflation. Your wages don't stretch as far. Your savings don't go as far. And now your cost of living is significantly higher. So you're becoming poorer each and every day. Inflation hurts the poor. And the reason I'm not even talking about the middle class is because inflation is the reason why the middle class is getting wiped out.
It's turning into more poor.
It's turning more into either poor or the wealthy, because if you understand what's going on here, you're going to change the way that you use your money, and it creates this divide. So more and more inflation creates a bigger wealth gap. And that's what we're seeing happen now. Some people during the pandemic became insanely wealthy.
Yes.
You know, they talk about how the richest Americans had gained billions and billions of dollars worth of wealth. Well, the poorest Americans saw no change.
Yeah.
And so when the cost of living is going up so significantly and you don't understand this, you're being screwed over by the system and you don't even see it happen. So that's the issue with inflation. And if it becomes a real big problem, well, then you can run into some sort of currency crisis, or you can run into an issue where the government can default on their debt. And this is an issue that's actually happening right now, not in the United States, but Sri Lanka. They just defaulted on their debt, the country.
Really? What does that mean?
We have so much debt. We have spent so much money. We have no way to make the payments. We're going to default. And now the currency goes into collapse. Inflation goes through the roof. The economy goes down.
Wow.
It's a big problem. And it creates a lot of civil unrest. So that is the worst case scenario, because now you're worried not only about the economy, but you're worried about the currency. And you're worried about being able to find food. You're being able to, food becomes a scarcity. And right now, because of the inflation issue, not just in the United States, but around the World Bank said that about a dozen countries are on the verge of a potential debt default.
Wow.
Because of all of the inflation that's going on. So it's a real issue, and most of us have no idea it's happening. That's why it's known as the hidden tax, the silent tax. Everybody pays the price, and if you don't know you're paying the price, you're the one that's probably paying the biggest price.
Right.
So this is where it's so important to get educated on that.
So what would be the thing if there was the biggest opportunity to create wealth right now?
Yeah.
What industry or sector would that be? Is that in this, stocks? I feel like nothing is stable. Like if you're going to put money in something, you could make a lot or you could lose it all within a month. Is it the stocks? Is it the crypto, NFT space? Is it the housing? Is it, you know, investing in yourself in another way, what would you say we should be investing in?
Absolutely. So the answer is going to be looking for where the opportunity happens.
Okay.
So 2008
tell
was
me.
real estate. That was the biggest real estate opportunity in our lifetimes. In 2020, it was stocks and crypto. In 2020, the stock market from its bottom to the end of 2020 grew by 60%. The crypto market grew by almost 600%. And so it's
But if you didn't get out, you've
if you
kind of
didn't
gone
go,
back to...
of course. But this is where, again, the psychology of your investing is so important. But the thing that you want to pay attention to now is it's you want to see where things are going.
Yes.
That way you can make the right moves. Remember, history doesn't repeat itself, but it rhymes.
Yes.
Right? So you want to look at the same data points and the same factors and see what's happening. So
if you could make a prediction of what do you think is going to happen over the next few years, based on history,
So let me.
what's rhyming right now?
Yeah.
What's rhyming for you?
So it's going to depend on one thing.
Okay.
It's going to depend on what the Fed does next.
Okay.
Because right now, and I'll explain, and I'll give you a defined answer in just a minute, but I like to give you my reasoning first.
Yeah, give me the context.
So right now, the Fed is working to fight inflation. And
But how? It's like 8-9%.
they're raising interest rates, and they're going to start selling off their balance sheet. So the Fed balance sheet is around $9 trillion.
Crazy.
And so starting in June, they're going to start selling off these assets while raising interest rates. And the Fed says that they're willing to fight inflation because the economy is so strong and robust. And because the economy is so strong and it can withstand any sort of interest rate hikes. So what is the Fed doing in essence? They're pulling money out of the economy. And now they're hoping that the economy will continue to stay strong. So by raising interest rates, what's happening? Housing is becoming significantly more expensive. And
Housing or rent? Like buying a home or renting?
both of them.
Yeah.
Rent costs have gone up by 20%. Buying a home has gone up by even more. And I'll tell you why. Because when people talk about home prices, what do they talk about? They say, oh, well, home prices are up 20% from a year ago. But your housing cost is significantly more than 20%, because if 1 year ago you wanted to buy a home for $500,000, you could get a mortgage for 2.5%, 30-year fixed. Now,
2.5% mortgage? Oh, wow.
Yeah.
For interest rate. Yeah,
interest rate, 30-year
You put
fixed.
20% down, right?
So $100,000 down.
Yeah.
You could borrow
2.5%,
$400,000 at 2.5%. It would cost you something between $1,600 and $1,700 a month.
It's not bad.
Today, that home is not $500,000, it's $600,000, 20% more, and your mortgage rate is not 2.5%, maybe 5.5%. So what does that mean? If you put 20% down, you're not putting down $100,000, you're putting down $120,000, and you're not financing $400,000, you're financing $480,000. So you have to borrow more dollars, and then you're borrowing the dollars at a higher interest rate. So you're not borrowing at 2.5%, you're borrowing at 5.5%. So now your mortgage on that same house, the exact same house, assuming no upgrades, has gone from $1,600, $1,700 a month to $2,400, $2,500, $2,600 a month. So your housing cost is significantly higher. So now with interest rates going up, what's happening? People are saying, oh my God, homes are significantly more expensive. Mortgage applications are starting to go down. In the stock market, what's happening? Well, businesses are having higher costs to operate, because now if you were one of the companies that were relying on debt and your stock price in order to operate, because when you're in a low interest rate environment, you don't really need to make money, because investors will keep throwing money at you because they can just keep borrowing money super cheap.
Right.
And so if you were one of those companies that were not profitable, you might have just said, well, I'm worth $40 billion. I don't need to make a profit because I could just borrow money. I can just get an investor to invest money into me. But now people are looking at you and saying, I can't borrow that same money at the same rates as I could before, so I need a better return, and you're not making a profit, so I'd rather invest my money somewhere safer. So a lot of companies are seeing their valuations drop, meaning stock prices are dropping as interest rates go up. Same in the cryptocurrency market. There's a saying that when the tide goes out, you see you swimming naked. What happens? Well, there's a lot of free money out there. There was. And so people can just keep swimming in the free money, throw it into anything, and just hope that they'll make money on it because there's a lot of dumb money out there.
Yeah.
But when that money starts to go away, that's when you see who was swimming naked. That's when you see the scams, you start to see the bad investments, and you start to get exposed, because now people want to put their money somewhere safe and somewhere smarter. So people are leaving the risky investments and moving to the smarter places. So now back to your question, where do you go? Where do you put your money? And the reason why it depends on the Fed is because it depends on what the Fed does next. If they continue fighting inflation, and they say, we're going to do whatever it takes to bring inflation down. That means we're going to pull money out of the economy. We're going to jack up interest rates, even if that means that we're going to go into a recession, even if that means we cause a housing market crash, even if that means we cause a stock market crash, we're going to keep doing it. If they do that, well, then you're going to have a big buying opportunity in pretty much any asset class, assuming you find a good investment there, a strong fundamental investment. But there's also the chance that the Fed doesn't do that. There's a chance that the Fed says, we're starting to raise interest rates now, and this is what they're doing right now. And then 6 months go by and they say, these higher interest rates are really hurting the economy now. The economy isn't as strong as we thought.
So let's bring it back down a little bit.
And then they start cutting interest rates. Now what are you doing? You're in a high inflationary environment.
Oh, man.
And now you're creating more inflation in order to fight the economy. Because the Fed can either fight inflation or they can fight the economy. They can only do one or the other. And in all the previous crashes that I talked about, we were never worried about inflation. We were worried about an economic slowdown in 2008. We were worried about an economic slowdown, 2001, economic slowdown. Even in 2020, the worry was not inflation, the worry was deflation.
Right.
The Fed says we can't have deflation. We don't want people to have their savings worth more. We need to create more inflation. And now we have an inflation problem. And so if the economy goes down, what do? You create more inflation to save the economy. However, that creates more inflation. Our economic slowdown today is being caused by inflation. You cannot fix an inflationary recession through more inflation. What's that going to do? It's going to make the inflation problem worse. Yeah, it'll probably boost the economy in the short term, but it will crash the stock market and the real estate market, not downwards, but upwards.
Interesting.
And that's a very interesting concept to think about, because when you think about a market crash, what are you thinking? Stock prices go down, real estate prices go down. But if you're worried about high inflation, and then you start creating more inflation, what's going to happen? People are going to take the dollars and they're going to want to get out of cash, because they're going to say, if our inflation rate goes even higher, our cash is going to lose value even quicker. We want to own any asset, stocks, want to own real estate, maybe cryptocurrencies, some smart ones. You're going to see more cryptocurrencies potentially go under. We've already seen some go under. So you're going to want to make fundamental investments, but you could see just a lot of money flow into these assets, kind of like what we saw happen in 2020. We were in a recession, but the stock market was going upwards.
Right.
Why? The money printer let it all in. So that's where you want to pay attention to what's happening there.
How high do you think the interest rates could get to? What's the potential range, you think?
So let's talk about history. In 1970 was the last time we saw inflation this high, or in the late 1970s, closer to 1980. And in that time, we were facing double-digit inflation. And in order to fight that inflation, the Federal Reserve then said, either we can fight the slowing economy or we can fight the inflation. Similar issue. It was called stagflation. Stagflation is a very weird economic concept where you have a slowing economy and you also have rising costs. So it's like the worst case scenario.
Sure.
And so during that time, they said, okay, we have a slowing economy and we have high inflation. We're gonna say, ignore the economy. We're gonna bring down inflation because that will save our dollar. It'll save the currency. And so what did they do? They jacked up interest rates, and mortgage rates were almost 20%.
What? When was the last time it was over 10? You remember?
In the 90s to early 2000s, around that time.
Really?
It was 90s probably.
Yeah.
It was the last time it was over 10.
So if it went over 10 now, what do you think would happen?
If the Fed continues to jack up interest rates to bring it over 10%, home prices will have to go down. I mean,
Because people won't be buying.
you can't afford the home at the same interest rate today. And that would also significantly hurt businesses, because the businesses that are relying on debt, they're going to see a big pain, a big crunch. And so that's where the Fed is facing a big dilemma. They're hoping that inflation will go down. But the question is how? They're hoping that it's still just supply chain. They're hoping that it's still just Russia. They're hoping that it's still just other issues. But the one issue they never talk about is the money printing and the stimulus. And that's the concern. If we really want to get serious about fighting inflation, we might have to get more aggressive. And if we get more aggressive on inflation, it's going to hurt the economy. Even a previous Federal Reserve chairman said that we need to crash the markets because we need to get serious on inflation, because we don't want to deal a currency crisis would be even worse than just dealing with a recession. And so that's where it's, what is going to happen? And are we really that bad? And the last thing I want to mention on that is the money printing that we saw happen in 2020 it has just come out that it also led to the biggest financial fraud of America ever.
Really? Why?
Because people abused the system.
Oh yeah, they
So,
lied about
everything.
things. They got free money they shouldn't have gotten.
It was the biggest financial fraud in
Wow.
our history. And the reason why, it was from all angles, but if you look at the PPP, which was the loan to businesses, that if you have employees, you have rent, if you have business costs and you're shut down, you can get essentially a free loan from the government. And you don't even got to worry about paying it back. It's
crazy, right?
And if you are taking out, I think it was less than $2 million, you don't even have to explain what you use the money for. You have no justification. You can just borrow the money. So what happened? Well, some businesses use the money for good. And some people said, well, I don't have a business, but I wonder if I can look up a registry of businesses and say, oh, these are some businesses, and just start applying under these business names and say that I
way.
need the money.
Wow.
Billions and billions and billions of dollars were stolen. Where did the money go? Lambos. They went into nice cars. They went into nice homes. And it's just coming out now. And so we saw tens of billions of dollars go to just complete waste. Even in the unemployment program, now they're starting to realize that some people who were getting unemployment didn't justifiably get the money or shouldn't have gotten the money. And so they were sitting at home playing video games when they should have been working or could have been working. And maybe they were doing something that they shouldn't have.
There was no incentive for them to work because they were making just as much,
Or more.
almost, or more.
Or even they were working and still getting the unemployment because they were doing something illegal. And so it created all this fraud. And so it's like we had all the stimulus without really any
Regulation, yeah.
without looking into what we're doing with it. And it created the biggest financial fraud. And now who's paying the price? The average person. Regular people are paying the price through inflation. And if you're just now learning what inflation is, you're really probably getting pinched by it. And,
Yes.
it sucks because we're never taught about this. When are we ever taught about inflation? When are we taught how to fight inflation? It's so unfortunate.
Yeah,
that,
unless you're in like an economics class in college or something, maybe.
well, look, I tried to get into I tried to get into business school when I was in college. I needed to take Econ 1 and
Yeah.
Econ 2. I almost failed Econ 1, so I couldn't get into business school. So I don't even know if the economics classes teach this.
I know.
So
I'm curious. Okay, let's say it goes above 10% interest rates
Yeah.
at some point this year. What would be your next 3 moves? Like, if you see it creeping closer there, what would you be investing in or taking your money out of, or what would be your next 3 moves?
Sure. So I think the more liquid and more active investments would be your liquid investments, things like stocks, things like cryptocurrency. So again, if you look at 2008, when the stock market crashed, started going down, it bottomed out in 2009, and then it started going up. So the 2008 crash happened, started in 2007, and it bottomed in 2009, and then it goes up. And by 2012, the stock market had fully recovered. But in 2012, that was when the housing market bottomed. So the housing market bottomed 3 years after the stock market crashed.
Wow.
And why? Well, the stock market has a lot of panic, it has a lot of emotions, and you can oversell very quickly because it's all emotions, right? When you see the headlines on the news talking about what's happening in the markets, people get scared and they
Sell
start
today,
panicking.
right now,
And
yeah.
then you see assets go down, and you go, oh my God, my assets down 30%, I want to sell my stocks, and then it keeps going down. And so it's a very emotional driven, and it can happen essentially in the blink of an eye because you can buy and sell stocks in a second. The housing market doesn't work like that. The housing market has a much longer lag time because it can take easily 30 to 90 days to buy and sell a home. And so you just understand that the housing market moves significantly slower. And so if interest rates, say, went up to 10%, I have a strong hunch that the stock market would get hurt bad. And I think there would be a lot of opportunity there. But
In the stock market.
In the stock market.
To
Now,
invest then in the stock market,
yes,
yeah.
and that's if you believe in the American economy. I do. If you think the American economy is going to be strong in 10 years, 20 years, then there's opportunity there for you. And so what that would mean for me is looking for strong companies that are not going into bankruptcy that I can find opportunity to purchase. And if you're not interested in investing in individual companies, if you're not willing to spend the time doing that, because I think the majority of people should not be investing in individual companies because they're not willing to put in the time, effort, research, and have the psychology to do that,
Yes.
then you can just look into an ETF that gives you exposure to the general stock market, the S&P 500, which is the biggest 500 companies on the stock market. And now you're just investing in a piece of America, and you're able to buy it at a discounted price. So that's what I would say there. And then if you're talking about cryptocurrency, you have to first I'm not here to tell you believe in crypto or don't believe in crypto. That's not what I'm here to do. If you believe in crypto, I invest in crypto. If you believe in the technology, you have to be willing to weather the storm, and you have to be willing to understand that, price changes the sentiment of crypto. Because when prices of crypto go down, people think crypto is fake. It doesn't matter. When prices of crypto go up, people think, oh, it's the future. And so if you really want to be an investor, you have to be able to cut through that emotion and cut through the noise and understand, okay, I like the blockchain, I like the technology. I'm not investing in the meme stuff. I'm investing in something that has actual value, that can actually create change, and then that can be an investment for you. But now, in terms of timing, I want to make sure I mention this, because a big mistake that happens, and this happened in big part in 2020, is you can't time the market. Right. Nobody knows when the bottom is. And it doesn't make sense trying to time the bottom. When the 2020 crash happened, I was making videos on YouTube. And one of the things that I was saying when the market was just collapsing, I said, look, here's what I'm doing. I'm buying on the way down. I buy in phases. I don't know when the bottom is, so I'm just going to keep buying. When I do my research now to find the good companies and the investments that I want to own. So I'd spend my time when times are good to find the good investments. I already know what I want. Now, all I'm looking for is a good price. I'm looking for a good entry point. When the price goes down, hey, it's on sale, I'm going to buy. If it goes down further, I'm going to buy even more. So every time it goes down 10 to 15%, I buy, and I buy more aggressively as it goes lower. And when I was making those videos, I got flooded with comments of people saying, why would you buy now? The market is collapsing. It's going to go way further. Wait for it to drop. And I kept saying, look, I can't predict the future. I don't know when the bottom is. I'm not trying to time the bottom. I don't know how long we're going to be at the bottom. Sure. What happened? The Fed opened up the money printer, the X factor I like to call it, and it shot back up. So if you were trying to time the bottom, what happened? You missed the opportunity to buy, because then it starts going up and you say, no, it's too high, I don't want to buy. And then it keeps going higher and higher and higher, and you just missed it. Yeah. So instead of trying to perfectly time the market, either do a dollar cost average system where every week you just buy a little bit of your investments that you like, whether the market's up or down, doesn't matter, passive, consistent, automatic, you let it do its thing. Or if you want to be more active and you want to look and research the companies and the investments that you want, make your list and just look for a good buying opportunity and buy on the way down. If I can tie this back into what we talked about in the beginning of this video, where we talked about the real estate market, we talked about everything going on with that. And I think the best way to explain that now, because you're putting some money aside, what are we looking to buy? Because I've talked about this recently a lot on my channel, where the American dream, because you mentioned this, the traditional American dream was being able to buy a home, pay it off, and now you own a home. The reason why this was the American dream for anyone in the world is because when you pay down your home, what are you building in your home? Equity. It's this concept of equity. And we assume, or we, for lack of better, we don't have the financial education to know that equity, which we think is going to make generational wealth, because equity is where real wealth is built, can only be found in the home that we live in. But that's not true. And this is where so many people get things wrong, because they now stretch themselves too thin. They do risky things, take out adjustable rate mortgages, use too much debt to buy a home, because they think that it's an investment that's going to make them wealthy, because now you can pay it down, build equity, and have something to pass down. However, there are many other ways to build equity, to build real wealth that you can then pass down. This goes back into the assets that we talked about, right? When you invest your money into stocks, you are building equity in these companies. When you go and invest in real estate as an investment, not where you live in yourself, as a rental property, you're building equity in your real estate portfolio. And this is different than your home, because when you buy a rental property, you're buying it for one purpose. You're buying it for the purpose of making money. You buy a home for the purpose of making memories. So if you're buying something for the purpose of making money, you're probably going to make more money, because you're going to do a different type of analysis than in the home that you live in. And one way is you can go and actually buy it. And the second way, like you've been talking about entrepreneurship, is you can build the equity. So when you build a company, you're building equity in the company. Like if you go and start a company, you are the 100% owner of the company. Well, if your company can make $100,000 of profit a year, your equity might be worth $200,000, $500,000, $1 million, depending on whatever type of company it is. But you're building equity in a company. So you can build this equity, you can buy this equity. And the whole idea of a recession is now this type of equity, these investments, these assets can go on sale. And this is where now you can come in and buy more equity at a discounted price. And this is one of those things. I'm gonna go back to, we keep mentioning what we talked about before in a previous interview. We're never taught this because school teaches us to become an employee. What do you do when you're an employee? You get a salary. Do you get any equity with a salary? No. Maybe your company gives you separate equity as a compensation package or something, but your salary is payment for hours that you work. And that is nice today, but once you spend your salary, you have nothing left. Real wealth in this country, in this system, is built through owning equity. We're never taught this. This is what gets me really heated up because we're never taught about this. And so if our whole system is taught around building and earning a salary, how come we're never taught about building equity? Because now what we should be teaching is, hey, go to school, get educated, but understand that wealth is built through equity. So earn a salary doing whatever you want, whether you're a doctor or you're working at a factory, doesn't matter. Take some of your salary, go out and build some equity. We're always taught and think and told that the way you do that is to follow the American dream of just buying a home, because now you can pay down your home, build some equity. But that is honestly one of the worst ways to build equity. You never talk about wealthy people becoming the richest people or wealthy people because I paid off my home. No, you become wealthy because you own a company, you built a company, you invested in stocks, you invested in real estate, you invested in equity somewhere else, and your home is honestly like one of the last things that wealthy people think about. Yet for the majority of people, when they think about becoming wealthy and building this type of generational wealth, what are they thinking about? Buying and paying off my home. And there's so much more to that, but it requires that financial education.
Yeah. I want to go back to something we were talking about earlier, debt, covenants. So you were talking about at the time that there's two kinds of selling. There's selling because you choose to, but oftentimes people are doing it out of panic, and then there's selling because you're forced to. In business, when you're taking out a loan, they put covenants on it, meaning the following things must be true for you to have a loan in good standing. So even if you're making your payments, if the ratio of like your accounts receivable, so the amount of money that you know that you have coming in, if it drops below a certain level, if that's one of the covenants, or you have to have a certain amount of savings in the bank, or your profit margin has to be 13% or higher, whatever. They put these covenants on that. Is that's what's happening when somebody is getting overextended with either?
Sort of. So if we talk about real estate first, when you go, now there's a couple of different levels of real estate investing and loans, assuming you're buying it with debt now. In the beginner level, they're gonna look at your income very heavily. Your income to debt ratio, just like when you go and buy a home, they're gonna look at all the things, same things to go and buy a rental property. Then as you get a little bit bigger, they're not even gonna really care about your personal financial situation. What they're gonna be looking at is primarily, just like you were saying, the actual investment itself. Because now you're buying essentially a business. If you're buying an apartment complex, well, now you're buying essentially a business, and what they wanna see is, okay, what's the price of this? How much rent are you generating every month, every year? What are your expenses? What is the margin? Because they know that this property is going to continue to generate rental income, and the rental income is going to then pay for the mortgage, the loan on the building. And so that's what they're looking at. And of course, they're going to want to see your personal financial situation, because they want to see, okay, if things go bad, what can you do? Do you have any access to excess cash? Do you have any other access to capital? Do you have any other wealth? Do you have any other experience? But the primary thing as you get bigger and bigger is just going to be the property itself. In the stock market, oh man.
Well, let's stay on property for a second.
Sure.
So are they going to call the loan, like there will be a predefined set of things, I imagine, that if they stop being true, they'll call the loan. So for instance, as long as you have 20% equity in the building, we're fine. But the second the value of the property drops, like if you put out, let's say $5 million to buy it, if the property ceases to be worth $5 million, then we're gonna basically call it, because I know that's what ends up happening to somebody in the crypto market.
Yeah, it doesn't
If your
work like
crypto is worth $1 million and you've got $1 million borrowed, the second that that's worth $1 million, they're gonna do a margin call.
Sure.
Because now it's like, if it goes down any more, then they're out money. So they literally, the second it drops to the amount that you owe, boom, it's gone.
It works similar to that in the stock market, but in the real estate market, no. They're not paying attention to the valuation of the property day to day because that's also kind of ambiguous. A property is worth really what someone's willing to pay for it. You can run an appraisal, you can do comps, but at the end of the day, it's what someone else is willing to pay for it. So instead of them looking at the valuation of the property or what they think it's worth, what they're looking at is, are you making the payments? Because if you're making the payments, they're not going to ask you questions. If you stop making payments, that's when they start asking questions, and that's when they start trying to figure out what to do, and then they might force you to sell. Now, forcing you to sell in crypto is very different than forcing you to sell in real estate, because forcing you to sell in real estate is not going to depend state to state, what the foreclosure process looks like, how intense that process is, and how long that process is. Versus in crypto, from my understanding, is it can be pretty instant. You get that margin call, they can take your crypto back pretty quickly. Real estate, it can be a year, and then there's a lot of different tools that can be done. Like in the 2008 real estate crash, one thing that was very popular was a short sale. This is separate from a foreclosure. A short sale is now where there's three parties working together. The seller, the bank, and the buyer are working to now come to an agreement on a price where the bank agrees, hey, we're going to lose money on this deal. We're willing to lose X amount of money on this deal. The seller says, yeah, I'm going to walk away from this deal and not make any money, but at least I don't get foreclosed on. And the buyer says, fine, I'll pay this money. I was involved in multiple short sales, and one of the short sales that I was involved in, they also had an additional provision where, okay, the bank's going to agree to lose however much money. I don't remember the exact numbers. The seller agreed to walk away and not get a penny from the home. And then they also wanted me to write a separate check at closing to the seller's contractor because he had done some work on the property, never got paid, and had put a lien on the property, meaning he essentially made a claim against the seller backed by the value of the home that, hey, I need to get paid. So I then had to also work out a deal with the contractor where all these parties, where the contractor had to agree to a certain amount of money. This was a long time ago, so I don't remember the exact numbers. But so it was two separate checks that had to go. One was to the contractor to make him happy and whole, and then one was to the bank, where the bank now was okay with losing a certain amount of money. And they're willing to do this, the bank, in that situation, because if they had gone through foreclosure, they would have to spend way more money on legal fees. They'd have to spend way more money on administrative fees. And then they'd probably even sell the home for less money when it came to the actual foreclosure process. And the seller would prefer a short sale in this situation, because if you don't do a short sale and you go into foreclosure, then your credit score gets hit. You have to go through the entire foreclosure proceeds. So
you don't take a hit if you do a short sale?
If you do it right, you typically don't have to get the same sort of credit score hit because you're just selling the home versus a foreclosure. I mean, so there are, again, the reason why I said you have to do it right, because there's provisions, there's certain contracts that you want to make with the lender saying that they're not going to come after you for the previous money, and they're not going to file some other things. So there's specific contracts. So it gets very complex where you want to make sure you have a good attorney, because it could affect your credit score, and it could also not affect your credit score as much, depending on how good your representation is and how well you draft these agreements. So it becomes very complex versus, we talk about with crypto or with the stock market. If the value of your investments fall to a certain amount and you don't put in a certain amount of money, it just sells. There's nothing else. Like they're either going to say, give us $10,000 right now, or we're going to sell your investments for you. And there's really no other if, ands, or buts. It's like almost automated in that sense. So it's a very different situation.
How do people get into the stock market with debt?
It's actually very simple. Most brokerages make their money through margin, meaning debt. Because if we backtrack.
So you're saying if I go somewhere like Vanguard, I can buy on debt?
So let's talk more about the mainstream, like Robinhoods and the more of the mainstream brokerages in that sense. Where
Robinhood now is mainstream, huh?
They're pretty mainstream.
How long have they been around for?
Ooh, I don't know the exact number of years.
It's not that long, right?
They're one of those startup brokerages. I don't know what year they started.
Wow.
Well, let's start about 100 years ago, and then we'll kind of take this little time lapse. 100 years ago, if you wanted to buy
just a couple days back.
If you wanted to buy stocks a long time ago, you would have to have access to an actual stockbroker. You would probably have a financial advisor. It'd be a very difficult process. and a very long process where if you wanted to buy a stock, you would call somebody who would call somebody who would then make a transaction, maybe multiple people to make the transaction. So it was a very long process. Then in the early 2000s, started coming these digital brokerages. This is where Charles Schwab, E-Trade, TD Ameritrade, they really became bigger. But the way that they would make money was they would charge you a fee, a commission to make a trade. So it was somewhere between $5, $7 to $15 to even $20 to make one transaction, to buy a stock or sell a stock. Then after the 2010s came things like Robinhood. And Robinhood then shook things up even more where they said, we're a commission-free brokerage. You can come trade stocks on our platform and we're not going to charge you a single trading fee. Now, if you're not charging a fee, how are you going to make money? Well, the first way that they made money was this whole concept of you would buy a stock on Robinhood and then Robinhood would then make that transaction a little bit later and they would sell these trades. It was a very complex process where they would sell it to another entity. So you were kind of doing an indirect trade. For you as the trader, it made no difference or negligible difference. You wouldn't even know the difference. Versus Robinhood is then selling these trades on the back end. But then the second way that they would make money is through margin, meaning that Robinhood and these platforms would then lend you money based off of how much money you have in the platform. And then you can trade not just with the $100 that you have in your Robinhood account, but now with the extra 20, 50, maybe $100 that Robinhood is giving you that you can now trade on margin. And the amount of money they're going to give you is going to depend on a number of different factors. But then they literally will just extend you this line of credit and now you can trade. And I know this from firsthand experience, not with Robinhood, but with a different brokerage, because when I first got started, and we talked about with trading, this was when I forget if it was my first year in college. I spent a summer doing trading and I was using a platform and they told me that, hey, I started trading and then they said, let's upgrade your account to a trader's account. And I said, okay, cool. And then they said, hey, we will also give you more money to trade with, margin. I didn't, now this shows you how naive I was with the lack of financial education that I had. I thought it was free money. I didn't know that this money had strings attached to it. I didn't know that I had to pay the money back. I didn't know that I was being charged interest. So what would happen was I traded money.
Now, I don't know if you've heard, there's a guy named Jaspreet Singh, and he says the most expensive money is free money.
It's free money. I learned that lesson in a very painful way. So I was trading money with the brokerage's account where I just thought that because now I'm making more trades, that they're going to make more commissions, that there's going to, that's how they made their money. Well, long story short, I had lost money on some of these trades that were on margin. And they said, hey, you need to put more money in the account. I was like, what do you mean? Okay, I got to make up this whatever margin. So then I had fortunately some money. I covered it. And then I decided I'm no longer going to be a trader. I'm done with this.
So we loaned you money to make the trade. You lost, pay us back.
I paid that money back. So now
how long did they give you to pay back?
I don't remember. I paid it. I had the money, so I just paid it because I understood that I had lost their money. So that part made sense to me. And then I was done trading. I realized that this is not for me. I don't want to spend this time.
What do they do if you can't pay it back?
Well, I don't know exactly what they do, but they're going to come after you. I'm sure they will file a lawsuit. I'm thinking about this. I'm an attorney, right? From a legal perspective, it depends on how much money you owe and what you're going to be doing. Because now they can very easily file a claim against you. They can run a lawsuit against you if you're not paying. There's a lot of different things they can do. And the more dollars that you owe, there's more things that they can do, just like with anything else. But then, I'm done trading. And then a number of months go by and I start seeing this like deductions from my account. I'm like, what am I being charged for? So I call them up and they're like, it's your margin. Like, what are you talking about? I'm not doing anything. Well, we gave you money. It's in your account. You have to pay interest on the money that we gave you. And that's when I realized there's a cost to money, right? And so that's when I said, turn this off, take your money back. I don't want this. I paid interest on it, and that was the last time that I did that. But this is, I was, 18 years old, 17, 18. I had no idea, probably 18. I had no idea what I was doing. And this is where a lot of people get in trouble because you think, oh, I can double my money pretty quickly. But if I use their money in addition to my money, now I can quadruple my money because I only got to pay you a little bit of percentage if you know that you got to pay them back.
So I don't know a lot about Robinhood. I am super stoked that the average person can now get into the equities market, but woo, that's how people get into trouble when they're using
it's the
debt.
financial education, along with everything else. Accessibility is great, but the accessibility without financial education can be dangerous now if you start using these tools, because if you don't know the cost of some of these tools, it can be very bad. For example, think of a credit card. Is a credit card a bad thing or a good thing? It depends who you ask.
Right. Depends on
You
how
know,
you
there are
use
so
it.
many people have thousands of dollars worth of credit card debt that is skinning them alive.
Yep.
I only transact with the credit card. Why?
For
Because
points?
well, I get my points, I get my cash back, I get my fraud protection, I get free insurance on my car rentals, I get all these things that I wouldn't get if I paid with cash. Even if I debit card, I don't get all these things. So now when I'm spending, I spend a lot of money, especially in my business. If I spend $100,000 a year or $500,000 a year, I'm gonna get a big cash back check that I could put right back into the business. I can spend it, I can use it on a vacation, I can get free perks. I mean, I get so many different things, but that's only because I know I'm not gonna change my spending because of my medium. I'm not changing my spending because I have a credit card. I'm just using a credit card to facilitate my transactions as opposed to using it as a free money printer.
Right.
And again, what is it? It's that financial education along with the tool. It's not the tool that's inherently evil. It's when you use a tool without that financial education that now you can get screwed over, that you get in trouble, that you start hating the system. Oh, they're out to get you. They're not giving you the financial education because it's not in their best interest to give you that financial education. But this is where if you have the financial education, you can use the system to your advantage. But the problem is we are never taught this, right? And it's just like, for me, it pulls on these strings in my brain because it's like, oh my God, it just screws so many people over because it's profitable to keep people poor. If you don't understand this, you're going to spend more money on your credit card. You're going to spend all your money making
Bro,
everybody
that's
else
a
look
terrifying statement that you just rushed past. It's profitable to keep people poor.
rich. It is profitable to keep people poor.
Is it profitable to keep them poor or to keep them ignorant?
It's a mix of both. When you're ignorant, you stay poor.
Yeah.
They go hand in hand. Because if you don't have that financial education, what are you going to do? You're going to go spend your money at Gucci, Louis Vuitton. You're going to be buying that extra guac because, hey, you got that money. Then how are you going to buy it? You're going to buy it.
that extra.
You're going to buy the extra guac lifestyle. You're going to buy it with your credit card. And you're not going to wait until you can afford it. You're going to buy it now because you can. And nowadays, it's not just a credit card. It's buy now, pay later. And everybody talks about how buy now, pay later is 0% APR. There's no cost to this money. You can buy it now, pay later. But again, like you said, what I said, the most expensive kind of money is free money. They got to make money somehow. There's a reason why there's billions of dollars pouring into the buy now, pay later industry, one of the fastest growing fintech industries ever, because when you spend on buy now, pay later, what happens? One, you're spending way more money than you would have if you didn't buy now, pay later, because if you wanted to buy $1,000 sofa, you have to have $1,000 in your pocket. Well, now you can buy it now, pay it later. So now you can spend $1,000 on something else. Second, what happens to so many people is you don't pay it off in time. Now, when you don't pay it off in time, it's no longer 0% APR. Now you get slapped with a very hefty, very expensive fine. So now it's, okay, the tool plus the education, going back to inflation. Inflation, is it a good thing or bad thing? I think you asked me that last time, or are you talking about, the way the system works? Again, it just depends. Depends on if you understand it or not. If for wealthy people, they love the inflation. Hey, keep paying more for my assets. Keep driving up the value of my assets. Keep making me wealthier. Versus for the average person, you keep getting screwed over because now your groceries are more expensive, your gas is more expensive, your rent is more expensive, everything is more expensive. Everything, it's understanding the tool and the education. The tool, I'm going to give one more example because this is the stuff you can see. It gets me keeps me up at night. It gets me really upset because I understand both sides, because I never had that financial education, and now I see the benefit of it, and I'm like, please learn this. Even if there's a clickbaity title, because I need you to watch it, please learn this. We talk about, how the government many times, they might have good intentions, but the people in government aren't economists. They're not always the best decisions with their money, because sometimes their goal might just be to create jobs. And Creating jobs is different than being efficient. And so, if you look at, like, for example, the college education system, where back in the day, it was not easy to get a student loan. And back then, college was also a lot cheaper. And back then, a lot of people were not getting a college degree. So if you had a college degree, what happened? You stuck out. You were different. You had something. Well, what happened later, I think this was in the 70s now, the United States government, maybe the 70s, 80s, around that time, the United States government passed a law that said that if you want a student loan, we'll guarantee it. Anybody can get access to college education. The government will guarantee a student loan. Now, this sounds like great news. Hey, everybody can get educated. Yeah. How can that be bad? But colleges heard this and it was music to their ears. You're telling me that I can charge any amount that I want and the government is going to guarantee to give that to our students? Sign me up. Now we can hike up our tuition rates and people keep paying. Now everybody can go to college because we think that we need to go to college in order to become successful. And now where we are today, everybody has a college degree. If you go and apply for a job with a college degree, you don't stick out. You're just like everybody else.
Dude, this makes me really sad. So this is human nature, so I'm not going to waste a lot of time complaining about it. But take the PPP loans.
Oh my gosh. The biggest financial fraud in the history of America.
Yeah, that's terrifying. And I remember when it was all happening, dude, when it's going to be really easy for people, especially young people, to forget what COVID was like when it first popped off. And it was, is everyone going to die? Like, is this a 1918 type flu where 50 million people die? Like, it was just really, really unknown. And so when businesses were just closing, and the government came in and said, hey, we got you. Like, we're going to cover this. I was actually stoked. As a free market capitalist guy, I was still like, word, their government has a role. This is amazing. I'm super stoked. Now, I didn't take, like you, I did not take a dime of PPP money. I thought, I want to leave it. Every dollar I take, and I can afford this moment, every dollar I take is a dollar somebody else doesn't get.
Right.
But I should have, though I did not, predict this will get abused to the extreme. I've done so many contracts in my life. I was just reading one yesterday, and the lawyer put a provision in it, and I was like, why? Like, it was a provision that's good for me. But at first I was like, why did they put this? So I started making a note like, hey, don't do this. Like, and then I was like, oh my God, they're protecting against XYZ scenario. And I was like, holy hell. Like, yes, people would do that. I was like, I hate that you have to protect against that. But 1,000%, like, there is a percentage of the population, like, here's one thing that winds me up. We don't prosecute theft under $1,000 or whatever it is.
Welcome to California.
Yeah, $999. You've got people running into stores for grocery bags, just into the bags and out the store. Dude.
Welcome to California.
Yeah, welcome to humans.
Yeah.
It's like, it's
and then
humans
what
gonna
happens? Now we're spending more money to go after the bad stuff.
On the PPP stuff?
On the PPP.
The 87,000 new IRS agents being hired?
Yes.
Oh my God.
So the Inflation Reduction Act has just been signed by President Biden. And one of that provision is billions of dollars going to beef up the IRS. Now, I do want to clarify one thing about the 87,000 agent thing, because I think there's a lot of misinformation out there.
That's a real number.
87,000 is a real number. It's over, but it's not today. They're hiring those 87,000 people over a course of 10 years. So, let me go over both sides, because I always like to balance this out so people understand what's really going on, that we can understand what might be coming. So the 87,000 people that they're hiring is going to be over a course of 10 years. They're anticipating that I think around 50,000 of the current 80,000 agents, so there's 80,000 agents right now, they want to add on 87,000 more. About 50,000 of the current agents are expected to retire over the next 10 years. So the new 87,000 is supposed to be replacing the people that are leaving and then stack on the workforce. What are they going to be doing? Well, on paper, not on paper, by word, they're saying that it's going to be only going after people making over $400,000 a year to audit those people. They want to go after the people who have taken fraudulent PPP money, fraudulent money from the government. Are they going to actually do that? Well, that's not what the bill says. The bill says is they're just going to be increasing the IRS workforce to do more what they do. Now, the next question is, what do they do? Well, how do we just look at history? 2021, 50% of IRS audits were on people making less than $75,000 a year. What does that tell us? Well, if they bring on more people, what they want to do, they want to increase tax audits. They want to go after more people for tax dollars. Now, we can debate all day long what is ethical in taxes. That's a whole different thing. Let's just look at the fact with the IRS thing. They want to go after people who owe a specific amount of money, which is what the taxes say that they're supposed to get. So that's what they said that they want to do. Well, if 50% of people who are being audited are making under $75,000 a year, what is probably going to happen with this additional IRS agents? Well, they're probably going to follow a similar percentage of people that they're auditing. They will probably try to go after bigger corporations. Part of the Inflation Reduction Act, if I'm not misunderstood, this just happened, like I'm reading this before this interview, was they want to create a minimum tax for corporations. So they want to go after corporations like Amazon who use deductions to pay little to no money in taxes legally. So they want to close some of those loopholes. They want to go after people who potentially didn't pay enough in taxes. So they're going to be doing a lot of this stuff.
Bro, I'm so worried about young people that were not thinking about taxes with crypto and just going ham. Like,
it's crazy.
Yeah.
Small business owners, if you're a small business owner, if you're investing your money, because and even if you're a side hustler, because in the last couple of years we saw the new $600 rule. If you're getting money on Venmo, that
$600 rule.
So-
You don't have to pay tax.
yeah, well, in Venmo never really tracked or reported these transactions rather. Versus now, if you're getting a lot of money in Venmo, you have to report it. Venmo will report it even if you don't report it. So, doing side hustles become more difficult.
I never even thought about that.
So there's a lot of different things this additional IRS agents isn't something that just happened overnight.
Yeah.
This has been something that's been kind of building up. I've been talking about this on
Changed
YouTube.
So much, Jesus.
Where, this is kind of one of the downfalls of a digital dollar is everything gets tracked. Every transaction gets tracked. Every purchase gets tracked. Every spend gets tracked. Because if there's no cash, everything is going to be taxed and tracked. So that's one of the downfalls in that sense. And this is where, of course, I'm not saying break the law. I never advocate for that. You got to pay what your taxes say. You got to pay. Use a tax advisor to make sure you pay the least amount of money in taxes legally.
Be tax efficient.
Be tax efficient.
Be tax efficient. There is a reason. Look, I'm not terribly tax efficient, I'll be honest, because I find that shit so boring.
Yeah.
I'd almost rather just pay more money. But being tax efficient makes a huge difference. But if I could just PSA for a minute, pay your taxes, please. Like I'm begging you. The people get in trouble. Shout out to Mr. Beast. He gave that guy $1 million. Guy won $1 million. I forget what the hell why, but he won $1 million. And he actually took him to a tax advisor and recorded it. They wouldn't let him show it on camera, but he was like, he walked through, here was the advice. First of all, you're gonna have to pay, it's close to 50%.
Yeah.
Like you're gonna have to pay about $500,000 of your million. It's just gone, bro.
Yeah.
Taxed. Government got you, but pay it. Because if you go spend that $1 million and then realize that you owe
you got $500 on a check.
Dude, you have no path to that $500,000. Your ass is going to jail.
Yep.
You're either paying or going to jail.
Exactly.
That is some scary shit.
Exactly.
Pay your taxes.
Pay it.
Be tax efficient, but pay your taxes.
Exactly. So I've become much more passionate about this over the last while.
This?
Taxes.
Pay them or be tax efficient?
Both. Well, I've always had an accountant, but I've had good accountants and I've had bad accountants. And I will tell you, it pays to pay for a good accountant.
Facts.
And the reason why is because I'm going to give you just a straight example. I forgot what day this was, but I was in my office, get a call from my accountant. He says, "Hey, Jaspreet, how are you doing?" I said, "Good." He said, "Hey, listen, we made some miscalculations. I need you to do me a favor and send $100,000 to the IRS by tonight, and another $15,000 to the state by tonight. And I got a little upset. I was like, what are you talking about? How can you say that? And then he's like, well, one more thing I want to say before you say that you also are probably going to pay a penalty on this. And I was like, how can you say that this is my fault? He's like, it's no one's fault. It's just we made a mistake. And I said, if I'm the one that has to pay the fee and the penalty, something's not adding up. I fired him. I pay a lot more money for a good advisor. And this blew my mind because one, now when him and I meet, we are actually like going over, he records all my books, he goes through everything. He's like, here's your revenue, here's your expenses, here's what they look like, here's what you're spent, here's how things have changed, here's your profit, here's your tax liability. Here are things that you can do right now based on the tax law to limit your tax liability. Here's the things that we recommend, here's what you may want to consider doing. And now I'm like, wow, you're telling me that like I could have been paying this, so I'm paying way more than it was before, but I'm saving that money in taxes. And so this is actually a very recent thing. This is the first time I'm talking about this. I actually, over the last number of months, I talked to him and said, look, man, this is a service many people need, business owners, because most of the times we're not taught this type of stuff. So him and I are working together to actually build a proper tax advising firm we're gonna start with small business owners to help you understand your cash flow, understand your tax liability, and understand how to legally manage this tax liability, because the IRS tax code, I'm telling you from an attorney, I studied a lot of tax law. The tax code is over 2,000 pages long.
Whoa.
You can't understand this versus this guy, my advisor, he has a whole team. He lives, breathes, this is all he does. Like he wakes up and thinks about taxes, okay? Like, it takes a special type of person to do that. And I was like, look, we need to get your mind into more people. So him and I are working together to build something. So if you're a small business owner and you want the type of advice, I mean, I don't have any website or anything, but you just email me. Maybe my assistant can send you over to him, team@theminoritymindset.com. So like, it is so important now. 87,000 new agents come in. They're gonna want to raise taxes. Why? It goes back to inflation. Inflation Reduction Act, kind of a funny name, a spending bill, spend more money to reduce inflation. The goal is that they're going to reduce costs more than what they spend. My concern, without getting political, which has been happening many times, is that the government is not efficient with their money. They think that they're going to spend X. What ends up happening is they end up spending 10X and get a return smaller than what they expected. So I hope that the Inflation Reduction Act will reduce inflation. My concern would be what happens if it increases inflation. And the United States government is facing almost $31 trillion of national debt.
Oh, God.
How do you pay that back? They need to make money. How does the government make money? They tax people. You earn money, you get taxed. Everything you do gets taxed. You spend money, you pay tax. You buy a home, you pay tax. You pay tax on your property taxes. You pay taxes when you sell an investment. I mean, you pay taxes everywhere. And if they want to pay down this national debt, they want to pay down some of this deficit, they're going to need more tax dollars because they keep increasing the amount of money that they're spending, right? So if you're spending this much money, but you're bringing in this much money, you have to make up this cost somehow, and a very rudimentary diagram. So before it was print money, print money, print money. That's what the Federal Reserve Bank did. That's how the Federal Reserve Bank has built up a $9 trillion balance sheet, meaning they spent $9 trillion that they didn't have to help fund the government spending. Well, now what are we doing? We're facing the price, which is super high inflation, some of the highest inflation that we've seen in decades. And now we can't keep printing money. So now what is the alternative? We need to get more tax dollars because that's how the government can get more money. So either they're going to go after back tax dollars and trying to raise taxes. They're already talking about raising the taxes on corporations. Will they raise taxes on people? We'll see. Time will tell. But this is the reality. This is where you want to have a good tax advisor. And you want to be filing your taxes. You want to be paying your taxes. And especially now you want to be prudent because you can bet that they're going to be trying to ramp up audits. The best way to fight an audit is to not get into an audit. It is honestly the best thing to do, whether you're a person or a small business owner. That means, one, filing your taxes. If you don't have a lot of money, like if you're making under $100,000 a year and you just work a job, don't pay $10,000 a year for a tax advisor. use a free service online. Use something that's going to help you. You show your W-2, whatever else you're doing. It's much simpler. Now, if you're making more money, you have real estate investments, you have other investments, you have a business. Now you want to pay and invest in a good tax advisor because they're going to help you document everything. They're going to help you understand everything. They're going to help you manage everything. And there's a huge night and day difference between a good tax advisor and a bad tax advisor. I can tell you this from personal experience. And so my goal with this will be to help bring good tax advisors to people who need it. But this is all about just understanding, because this is not going to slow down, this whole tax stuff. It is probably going to be increasing, not just because of who's in office, but because of our economic situation, where inflation is so high and our national debt is so high and Social Security is drying up at its current rate. Like, the government needs more tax dollars. And not trying to get too confusing because it gets one more layer bigger. It's like an onion, right? We keep peeling back layers. The government taxes you on your income and profits. Well, what happens when an economy is slowing down? Incomes go down, profits go down. So if they're taxing you based off of that, that would mean that they're generating less tax dollars per person or in total, because now the economy is shrinking. Couple that with the issue of the high national debt, the high deficit. Now you start to really see the issues where, hey, we need more tax dollars. So now if you can't get it from a bigger economy, what's the next alternative? We need to charge more money in taxes. So this is the things that you want to be aware of, because unless our national debt and our deficit magically go away, this tax thing is going to be a bigger and bigger issue as time goes on.
In your opinion, would you buy a home when interest rates is over, when interest rates is over 10%? Or would you feel like, even though you're getting a massive discount, you're paying more every month, would you consider that, or you just wait until interest rates go down?
So I look at home buying very differently than the majority of people. I look at buying a home the way I buy a shirt. For me, a home is not an asset, it's a liability. So what does that mean? I want to buy a home because I want to create memories.
Yes.
I want to buy an investment property or an investment because I want to make money. So if you're buying a home because you think, oh, I want to get rich because of my home, I think you're looking at it the wrong way. Because you should be looking at your home as, I want to make memories here, I want to live here, and I want to grow my family here, and I want to spend time here. If that's the reason why you want to buy a home, what you should be paying attention to is not what's going on in the markets, not what's going on with interest rates, but instead what you should do is say, can I afford it?
Right.
And what does that mean? Can I afford the down payment? Can I afford the monthly payment?
Property taxes.
Can I afford the property tax?
The fix-ups.
The fix-ups, the move-in costs, and then you move in like I need the furniture, the upgrades, all
everything,
that.
man.
So if you can afford it, then you buy. If you can't afford it, if you're stretching yourself too thin, you don't buy. Because what happens to so many people is you get sucked into trying to time the market. But again, if interest rates drop and you own a home, you can refinance.
Right.
And so remember, it's
So
understanding
it's almost good to buy it when interest rates are high if you can get the house on discount, and then if in a year or two the interest rates drop in half, you can refinance.
just as make sure you can afford it. That's the biggest thing. You have to be able to afford it, because if you are stretching yourself too thin, going paycheck to paycheck to live in a home, you're hurting yourself, because now what you're doing, you don't have the ability to invest in other places. You cannot invest your money.
Do you think people will be able to actually buy a home in 5 to 7 years?
It depends on what the Fed does. If the Fed cuts interest rates when we go into a recession, so our economy slows down, the Fed starts cutting interest rates, mortgage rates go back down, you're going to see a bigger flood of cash into the housing market, and that will create a bigger wealth gap, and it will make it significantly more difficult for the regular person to buy a home. Home ownership will become a real American nightmare, because it will be so difficult for the regular person. We will turn into essentially a renter nation.
Wow.
Where homes are owned not even by regular investors,
but corporations.
Corporations.
Yeah.
They've been buying up. I was reading
Blackstone's been buying up a ton of homes,
yeah,
right?
BlackRock's buying like
BlackRock or Blackstone?
Yeah, they're buying 1 out of every 4 homes in certain neighborhoods.
That's crazy, man.
Yeah, and so
Because which means they believe people aren't going to be able to afford them, and they're going to have to rent from them.
Yes, and so it's a crazy times to understand that, which is why, again, I look at the home like a liability. Can you afford it? Yes, then buy. If not, then don't stretch yourself too thin. I used to be a real estate salesperson. And the reason why this is so important is because when I was a salesperson, what they say is, you want to tell people this is their biggest investment of their life. So buy a home that you love. Now, again, real estate agents are not bad people. Bankers are not necessarily bad people. However, you have to understand the messaging. If I tell you this is the biggest investment of your life, what are you going to say? I want something bigger. I'm willing to stretch a little bit thinner.
Yeah.
I'm willing to go a little bit further because I want that home. And so what does that do? Well, it makes the banker richer. It makes the real estate agent a bigger commission check, and they walk away. Now you have to deal with it. If you can afford it, great. But if you start to struggle with it, you're the one that has to deal with the problem by yourself. And so what happens for so many people is your home is a money pit until you sell it. And then you have to hope that you sell it for a profit, because there's no guarantee, right? We don't know where home prices are going to be in 5 years or 10 years. I can't predict that. I don't know what the Fed is going to do. And so the main thing that you have to understand if you're thinking about buying a home is ignore the markets, ignore what's going on in the world. Can you afford it today? And please do me a favor, okay? I very rarely try to tell people what to do, because I feel like, I want you to be educated so you can make smart decisions for yourself. But the one time that I really tried to give people, like I say, don't do this, is when it comes to adjustable rate mortgages, because they've been making a huge comeback now. Because now the interest rates are 5.5%. People say, I missed out on the opportunity to get a low mortgage. And now I have been seeing a huge growth of adjustable rate mortgages, because now banks will say, don't pay 5.5% on a home, pay 3.7% today, and it's a 5-1 arm. Meaning, after 5 years, it's going to readjust. And then your mortgage payments will readjust. And if it goes higher, don't worry, you can just refinance out. And it is so risky because we don't know where interest rates are going to be. If they go up, and they go up significantly, and now you're like, oh my God, let's just say mortgage rates are 10%. I don't want to pay 3 times more for my mortgage, from $800 a month to $2,400 a month. I can't afford that, so let me refinance. Well, if you do that and home prices have dropped and you can't refinance because the bank says, well, you don't have enough equity in the home, I'm not going to refinance you. And then you can't sell because you're underwater, well, now you're in a tough situation. So pay a little bit more, get that fixed rate mortgage, because if mortgage rates do drop, refinance.
Right.
And lock it in, because other countries in the world don't always even have the option to do a 30-year fixed.
Right.
We do. But an adjustable rate mortgage is significantly more risky. The only time that I would say an ARM is okay is if you are like 100% confident that you're going to be able to pay off the home during that initial teaser rate. Because if you cannot, then you are taking on a huge gamble
risk, yeah.
with the home that you live in, with your family's livelihood. It's one thing if you do it with an investment, but with the home that you live in, avoid that extra risk and just lock in the rate, please.
Right. I'm curious. Here's a question we got from people on YouTube. If someone has between $1,000 and $10,000 today to invest, they can spend on whatever they want.
Yeah.
And they had to turn it into $100,000 within 3 years.
Oh, okay.
What steps should they take? And obviously, this is not a guarantee. But if you're like, you have to turn this 1,000 into 100,000 or 10,000 into 100,000, what would you invest in right now, and how would you manage it over the next couple of years?
So I'm going to give you kind of a longer answer than maybe you were hoping for on this one.
Give it to me.
I'm going to start by telling you what you should not do.
Okay.
Because the first time I remember, I had $1,000 extra on my bank account. I was in high school. And what I did with that is I took the $1,000 and I went out and I bought a watch.
Don't do that.
Yeah, and this watch was very studded up. It was all crystals, and I was like, ooh, it's a nice watch.
Clean.
So what happened with what happened with that watch? Well, I made that watch company richer. I made the jewelry store owner richer. And now the $1,000 watch today is worth maybe $50. Right? It was just a show. So my value of my investment dropped like a rock, but now these companies made money, which now they could take that and invest in more products, more inventory, more marketing, more whatever. So the first thing is you got to understand that you want to put it in something that's going to help make you more money. So I'll give you my personal experience, because I saw the biggest returns by investing in me, but that will be more of an active investment. And then you have the opportunity for a passive investment, which is why it's a longer answer than what you were probably hoping for, but I'll try to get to all the answers there. So I feel like everybody who, especially if you had the entrepreneurial mindset, you go through these phases where you first go through this, like, I'm a hustler, side hustler phase, and then maybe you become like a solopreneur, and then you become an entrepreneur, and then you become a small business owner, and then you kind of go to that business owner
Yes.
route. So you kind of go through these phases because initially, when I first started as a side hustler, I didn't know what entrepreneurship was. I was just trying to make some
Trying to make
money.
some cash on the side.
Exactly. You're just starting off. For me, I started off in the event planning space. So I was in college. I started hosting teen parties for other kids in college. And I didn't really have any money to spend. I was 17 years old when I started. So I was like making very not attractive deals to me, but it was the only way I could get started. Because what I did was I would go to venues to host a party, and I wanted a venue that wouldn't charge me any money up front. And in exchange, they would say, just give us 50% of every dollar that you earn. So if I made $1,000 in revenue from cover charge, right, $10 to come in, I give the venue, the club, whatever, $10 or $500. And then I didn't have money for a DJ.
Right.
So I said, look, DJ, I need someone to play music. Let's work out a deal. They took 50% of what I was left with.
Oh, man.
So I would give them, I left for 500. They would take 250. Now, luckily, the business was able to grow where, we were making on the low end a couple grand a night. And then what was I able to? I was able to negotiate better deals. And then I was able to start investing my money into marketing. So I started taking some money, and I remember the first thing that we did was I started investing my money into flyers. It was $100 at the time to print 5,000 small flyers. And so I got creative, and I was like, look, before the event, we need to distribute all 5,000 flyers. We cannot have them in our possession anymore. And I can't do this myself, so I
Yeah.
need salespeople essentially. But I don't want to pay for salespeople.
Street team interns, college students. Yeah.
So what do? I'll give you VIP entry into the party, which doesn't cost me a penny.
Yeah.
And I will give you a shout out at the party. Doesn't cost me anything. Makes you feel cool, makes you feel exclusive. You get to walk past the line. You have this lanyard that says you're this, VIP, whatever. And so now I have people at some of the biggest colleges in my area passing out flyers, trying to get everybody to come because now you want to be one of those people. So I got these free salespeople that are trying to promote it.
Smart.
And you have to be creative. And that now starts to multiply the money. And that's when I realized that I'm just a side hustler. I will never be able to build a business
Sure.
like this. I don't want to build a business like this because it was a very dirty industry, which is why I got out of it. I did not like the scene. So I left that and started kind of going down more the entrepreneurship route, not going more into innovation. So I started a sock company. So now I'm starting to invest money, my own dollars, into the sock company. That way now I can build a product, build inventory, build a website, build advertising, build marketing. And now I'm able to grow this much faster because now I have some skills that I learned
Right.
from my mistakes because I screwed up a lot. My first event was a complete flop. I had some very bad failures. I had lost money on some occasions. It was, when you deal with club owners, you're
Yeah.
dealing with very interesting people and you learn very quickly, right? I'm a 17-year-old going up to some of these club owners trying to figure out the game. And
taking advantage of
They're
you,
taking
yeah.
advantage of you. And it's also dangerous. I remember one time I went to a club to talk to the manager because we had a party the next week. And I said, where's the manager? He said, oh, we got stabbed last night.
Oh, man.
And so, you learn very quickly to protect yourself, to protect your own interests. I mean, you're literally, there was a lot of physical stuff that happened. I was the bouncer in a lot of it. So you learn to protect yourself physically,
Sure.
you learn to protect yourself mentally, you learn to protect yourself financially. So I had to learn very quickly. And so now I take the things that I learned. I'm in a much safer, much smoother, much cleaner industry, the sock industry, but I start to learn and I start to apply some of the same marketing. How can I be creative in the marketing? How can I get
Yes.
people to learn? And you can't learn this in a textbook. You just have to try, be willing to fail. And so same thing there. Now I kind of go into the entrepreneurship route and now I'm starting to learn and I start to sell. And then I realize my passion isn't in socks. I like the socks, I like the business idea, but my passion isn't there. My passion is more on the financial side. So now I was also doing Minority Mindset as a hobby. Minority Mindset starts to grow, and then I start to build things like Market Briefs, which is our financial newsletter. So now I'm building Market Briefs, and now I'm turning more into from the entrepreneur to the small business side. Because in Market Briefs, I am not the only worker, right? On the Minority Mindset channel, it's my face, it's me talking, and it's we have video editors and all that, but it's mainly me. If I'm not working in Minority Mindset, we're not making any more content and it's not growing, which is okay, right? It's not for me as my business. For me, it's my way of helping to pursue my passion and my mission to help spread this sort of financial education, the things that I was never taught.
Yeah.
But my business now, Market Briefs, we have a whole team, right? We have people that lead the creative side, that write the newsletter every day. We have the business development team. We have the operations people. So we have a full team that are doing it. And if I were to not go into work tomorrow, or if I, something were to happen to me, the business will continue without me.
Right.
And so, it's a matter of flipping that money into the next thing, to the next, and being willing to invest the time, the education. So for me, it took me a solid decade. So I don't have a better, in 3 years, I couldn't figure out how to do it. It took me a long time to figure it out. And
maybe you could do it now.
Now it's
turn 1,000 into 100,000.
I could do it in significantly faster than a year.
I think one of the things is that I'm hearing you say is, invest that 1,000 into a skill. Invest it into a skill.
You will get the best return.
And put it into, that could be, okay, I'm going to buy a camera, and for the next 2 years, master becoming great at using the camera, whether it be video or photography, and then start working with clients and making some side income, and then using that money to reinvest in more equipment.
Exactly.
Using that money to maybe have someone else help me to scale my side business.
Yeah.
And then have that cash to invest in other things as well. It's like, and then develop new skills, and new skill, and new skill.
And it takes that mindset though, and the willingness to take risk, because, I would also caution that, because you have to be willing to just try. When I started Minority Mindset, I didn't have a camera. I didn't have any fancy equipment. I started recording videos off my phone.
Yeah.
And I was like, I'm not going to invest so much money into this when I'm trying to, it's a hobby for me.
Yeah. See where it goes.
See where it goes. And but I did take an acting class. I was in law school. So I was in law school part-time. I was working on my business full-time. And then I took an acting class in the evenings, night school, because I was like, I've never talked in front of a camera before. I'm not even a good public speaker. I don't know how to present myself. I don't even know how to hit the on button on a camera. How am I supposed to do this? So I took an acting class because I was like, well, I'm willing to learn. I'm willing to try. So you have to be willing to get uncomfortable, and you have to be willing to take that risk. And this is I don't know if this is gonna offend people, or I'm gonna say a bad word, but the reason why I think I've been able to become successful is because I'm stupid. My whole life, I've been told,
Me and you both, man.
I've been told, Jaspreet, you're stupid. Jaspreet, you're stupid. Why would you want to do that? And you know what? That's the reason why I am where I am today, is because I'm stupid. Because I'm willing to, I never looked at the risk. And you call it stupidity, but for me, I just saw the opportunity as I know I want to achieve something bigger, because I saw how hard my parents had it. I saw how hard my grandparents had it. My grandparents were refugees.
Yeah.
They lost their homes. They lost everything. They had to fight for their lives. And so I saw the things that my family had to go through. My grandparents raised me. They lived with me. So I lived with my grandparents and my parents. So I heard their stories, talked about the struggles, and that was where I started to get my basis of financial education. Because my grandfather would tell me, and he actually repeated this to me a couple of weeks ago when I was on the phone with him, and he was like, the biggest and worst disease is poorness. Because he said, I grew up and I saw extreme poverty. So my family's from a state in India called Punjab.
Yep.
And in 1947, our home, the state of Punjab, was severed by the government. And if you were a Sikh, a member of the religion that I am, and you're on the west side of Punjab, you had to migrate east, otherwise you were going to be killed. So my grandparents were on the west side, and you literally had to run. Like my grandfather, all he had was a clothes on his back and a sword in his hand. And as they were coming across, they got attacked by a mob. And he saw his uncle get his head chopped open right in front of him.
No way.
They had to fight. And so he put his uncle on a horse, and that was the end. And
Holy cow.
He got to the new side of India now, and he's there. He lost his shoes on the way. He has no home, no money, no anything. And so he says, I saw extreme poorness. And when you're in that level of poorness, forget helping other people. You can't even feed yourself. How can you feed your family? If you can't feed your family, you can't feed another hungry person. And so that's what he talks about. And that's what my initial the importance of, because again, they didn't know investing, they didn't know financial education. What he knew was survival. And what he would tell me is work hard, follow the system, and become successful. And that's why I wanted to become successful, because I saw that. Now I didn't know the right way to do it at the time, but that's what we're all taught, right? We're all taught, go to school, get good grades, get a good job. But there's so much more to it that we're never taught. But that's where my initial, I need to become successful, I need to work hard, was from that learning that basic kind of need.
I'm curious, this is something I don't think many people talk about, or I don't hear people talk about, the emotional side around money and the fear and emotions that are tied to money when you say, okay, here's a couple $1,000s that I have in my bank account, I'm gonna invest some of this. And then you see it in the stock market crash or go down, or you lose half of it in a week. How does someone manage the emotions in the visceral response to when their money goes up and also goes down in an investment?
So you have to know your strategy, and you have to be willing to stick to the strategy and trust your strategy. So that means when times are good, you need to spend your time learning, get educated, and believe your strategy. Because if you just start switching your strategy in the middle of times, you are going to be the one paying the price. The stock market is a place that transfers money from the patient to the impatient. And so if you are impatient because you're like, oh, things are going wrong temporarily, and you sell, what happens? Someone else can pick up your investment at a discounted price. So that's the first thing that you have to understand. So you have to understand the strategy and be willing to stick with it and make sure that it's been time tested. And again, history doesn't repeat itself, but it rhymes. And you can see the success of certain strategies through previous downward cycles. Downward cycles happen. It's a fact. I mean, every 8 to 12 years, we see some sort of economic slowdown. We see some sort of market crash. This is nothing new. This is why for successful investors, they love recessions. They love market crashes because it gives them an opportunity to come and buy. It's like Black Friday, right, for investors. So the first thing you have to understand is that. And then that will help you kind of just close your eyes. Remember, these are just day-to-day swings. You only lose money if you sell or if your investment goes bankrupt. So you want to make sure it's not going bankrupt and then understand that. But then on the flip side, you talk about the actual emotions. I'll tell you, it was difficult, because I had very high expectations on me to go out and become a professional. I became an attorney because essentially the conversation was, if you do not become a doctor, then you're going to lose all pride in the family. So at least become an attorey. So I said, okay. And it was difficult.
Second best.
Yeah, exactly. And
if you're not that, you're a failure.
Yeah, exactly. So, it was tough. And for me, I was like, okay, well, I can go to law school part-time, which means I can work on my business full-time. However, I wasn't the best student in law school. And the reason was because I was devoting a lot of my time and energy into the business. Now, I did good in law school. I'm not good. I actually did really well in the bar exam. I enjoyed learning. I love learning. But I knew that in the back of my mind, oh my God, if I graduate law school and things don't work, I don't know how I'm going to work as an attorney. Like I'm going to be like the bottom of the barrel. Like I don't know what I'm going to do because I don't know the traditional how to work as an attorney. I'm sure I could figure it out, but I don't know what I would do. And so I remember I was sitting there and I was like, oh my God, like when I'm done with law school, like it's over. Like I was already making decent money. So I was fortunate there, but I was like, what if this is just temporary? What if things go down and I don't have any security and that's it? And I would have so much anxiety. I couldn't sleep at night. I would wake up in the middle of the night multiple times and I would be shaking. And I was like, what if not only am I going to financially not be able to take care of myself, how am I going to take care of my parents? How am I going to take care of my family? What am I going to tell people? What am I going to do? And just the amount of questions it is hard. And that's, the faith in you, be willing to take that risk tolerance is hard. And I was fortunate that I have tough skin. And I think the reason why is because, my whole life I was bullied. I look different. I wear a turban, I have a beard. When I was in elementary school, I was picked on because of it. Then we went through 9/11 when I was, young. And then just a bunch of...
How old are you in 9/11?
I was maybe 10 years old. So right around 10.
And is the tradition, do the youth dress in this way as well? Or is it more once you're of a certain age?
So I wore a smaller turban.
Okay.
And, it's still very identifiable.
Right.
I was picked on before that.
How old were you then when 9/11?
Around 10.
So what was that like for you?
So I went to a school with all white people. And so people they were not accustomed to other religions and cultures.
Races and everything.
Yeah. And so when 9/11 happened, everything just went, it was really bad where I was picked on, bullied, I was punched, had my stuff thrown on the ground, I was spit on.
Wow.
There was times I had my turban ripped off. It was pretty bad.
Really?
Yeah, it was pretty...
At 10?
At 10. I went through, it was 10, 11, 12. It went on for years.
For years, because 9/11 was 5-10 years of...
Yeah, it was a lot.
This energy, yeah.
And, it was just one of those things where I would come home and, again, it was my grandparents. And my grandfather, he was a very tough person, right? He went through a lot and he ended up joining the army. He was a very he was like, you gotta stand up for yourself.
Yeah.
And I was like, I was a really timid young kid. I was like, I don't know. And then my grandma was this loving person who said, no, it's okay. Give me a kiss and hug. Say, no, you never want to fight. Just, just teach them about them. So I had these two kind of polar opposites. And I think that was great because that helped me see both sides and become more of understanding, different opinions. But, you know, when you go through that and you realize that, you know, I'm not accepted, or you feel that way, when you want to become an entrepreneur, you don't get accepted.
Right.
And it translates differently, where now it's like, oh, I don't like your business idea. You're dumb for doing that. You must be stupid for doing that. Who's going to start a sock business? You were supposed to become a doctor. That was the saying that I heard so many times. You know, people will call my parents and say, oh, so your son was supposed to be a doctor. Now he's selling socks. And it was like, you got to have some tough skin, man, to be able to hear that and keep going. And I was fortunate to be able to go through that and let that make me stronger. Where now it's like, it is what it is. You know, I'm going to keep doing me. And it's like, you know, it goes back to the, hey, I'm stupid. It is, I'm going to keep doing it because I believe in it. People don't see what I see, but I'm going to go for it.
Going along with that, what would you say if you saw someone now, say they're 20 or maybe they're 30 or whatever age, doesn't matter, but they don't have a lot of money right now. Let's say they're just making a normal amount of money, right?
Yeah.
But they have certain habits and behaviors and beliefs and thought processes that you witness. And you could say, wow, if you follow these things, you have the ability to make a lot of money one day. What would be those behaviors or habits that would determine if someone has the ability to be rich?
So the first thing is mindset. That's what I call, you know, my channel, the minority mindset. You have to believe it's possible for you. Because if you don't believe it's possible for you, you can have all the resources, you can have all the drive, but you'll never be able to do it because your mind is going to stop you. Your mind dictates your actions. And so you first have to believe that somebody like you can do it from your position and know that, hey, I will do whatever it takes. Now, if you have the mindset, then you have that I will do whatever it takes, that discipline, and then the willing to learn, nothing can stop you. So the discipline means that you're willing to put in work. You know, a lot of people say, don't work hard, work smart. And I think this is a whole bunch of crap. You know, like you can work as smart as you want, but if you're not willing to work hard, you're going to very much limit your success and limit everything in your life. You have to be willing to work hard.
I don't know anyone that didn't put in a lot of hard work for a period of time until they learned how to manage and delegate and optimize with resources and skill and time to work smarter.
100%.
But they had to work hard at some
in order
point.
to get there. Once you get there, now you can scale back and now you can, you know, reap the fruits of your labor, but you have to be willing to put in the work. The harder you work,
you got to make the flywheel turn.
You got to. And if it, you know, your hard work makes your smart work even more effective.
Key.
And then your discipline then is, it's just like anything else. It's being willing to stick with it when things go wrong and when things get hard, because things will go wrong. Things will get hard. I made a video on my YouTube channel talking about my worst real estate deal ever. I have this running joke with my friends that anytime I start something new, I get scammed and I get screwed over. And it is extremely difficult every time it happens because from the event planning business, I got screwed over multiple times. And then the beginning, it was just a complete flop. I mean, it just everything went wrong that could potentially go. I was supposed to host my party at a venue, planned it for months. The night before the event, it got shut down by the cops because they were apparently serving to underage people. It just lost.
Oh, man.
And this is my first event, and everything just goes wrong. Then, you know, I started my sock company. I got scammed by a fake marketing company as soon as I started, which is why I started Minority Mindset. When I started, I started for a little bit. I was trying to hustle, and I was selling stuff on eBay and Amazon. Me and my buddy, we found this supplier in China who was sending us authentic items that we were going to sell online. We were young and we were selling it. We were making decent money. And then we get a letter saying, you're not selling authentic stuff. We will potentially sue you for $7 million.
Oh, man, that's
I'm not even 20 years old. You know, I don't even, like $7 million. I can't even count that many digits. You know what I mean? So it's like, and I had to shut that down. So it gets tough.
Yes.
You know, you talked about last time, getting punched in the mouth. You have to be willing to get back up. And, you know, how do you prepare for that? Maybe go and get punched. Go to a boxing class. Get uncomfortable. Do something that puts you out of your comfort zone, even if it's not directly correlated. I try to do that. You know, I've joined a boxing gym here in California. I'm not the best boxer, just to get in shape, but you know, you get uncomfortable. I joined my acting class. That was really uncomfortable for me because I'm like this kind of like nerd. You know, I went to school. I was like supposed to study hard in school and do all this stuff, and now here I am trying to figure things out. I didn't fit in, but I made friends. Everybody's so friendly, and you get to meet more people, and you put yourself out of that comfort zone, and I think that will help you in other places as well. So it's not
Yes.
always, finance. We talk about this where we live a human life,
Yes.
right? It's not just my bank account. It's I'm a human first. My bank account is one aspect of my life.
Right.
And you have to be able to live as a human. That way you can actually enjoy your bank account.
Absolutely, man.
Right? I mean, you can have $1 million,
100%.
$10 million if you're miserable. Who cares?
Exactly. So you talked about the right mindset, the right discipline. The third thing was
The right mindset, the right discipline, and the right work ethic. So the willingness to learn. You have to be
Willingness
willing
to
to
learn.
learn. And if you're not willing to learn, you're not going to be willing to grow because you have to be willing to challenge your beliefs. And I think that became significantly easier for me once I started learning about money, because I realized everything I was told was wrong about money, from loans to banks to schools to your job to investing. When I realized that everything that I was told was wrong, that's when I started. Well, I was like, man, I don't think I know anything right. So it was very easy for me to start learning and listening to contradictory points of view. But you really have to be willing to listen to things that don't agree with one another, and that's in the middle is where you find intellect.
Yeah,
That's where you find where your best education comes. And so, if you listen to I listen to audiobooks. I'm not a very good reader. English
Yeah.
is my second language, right? So
Yeah.
I'm not the best reader, but I listen to audiobooks. And it's funny because I have books that will completely contradict one another just so I can learn from different points of view. Like I read Donald Trump's book, and then I read Barack Obama's book. I read the Communist Manifesto. I read the Capitalist Manifesto.
Right.
You read books that are completely
Interesting.
opposite. That way you can explore different points of view and understand and solidify your thoughts and just be more educated because
otherwise, if we grow up with just one belief the entire time and we don't see another side of something or another extreme potentially, then we're always going to think life is that specific way, as opposed to being open to seeing what other people think about, whether we agree with it or not. Just learn it.
And it's so much more important now because of social media.
Yeah.
And I mean, I know you know this, but you go on Facebook, Instagram, YouTube, anything. If you start watching one type of content, what are they going to do? They're going to feed you more and more of that exact same thing. And then all of a sudden you go down this rabbit hole where you think everybody thinks like you. Anybody who doesn't think like you is wrong. They must be dumb. They have no idea what they're talking about. But you have to. I mean, it's so much harder now, which is why it's so much more important. But you have to be willing to break out of this hole and start learning something else, and
Yes.
be willing to challenge your own beliefs. And that's where you will become smarter, and you'll find more opportunity, and you'll solidify your own beliefs on whatever it is that you believe in.
Absolutely.
If people can go, all right, this is volatile, stock market's volatile, crypto's volatile, housing markets can even be volatile. I'm not going to panic in a down moment. I'm going to set myself up where I'm not investing more than I can afford to lose. I'm not doing this on debt. You have to keep your income going. So whatever it is, whether it's a job or whatever, you have to be very thoughtful about that. But setting yourself up well, knowing that there's going to be a downturn, that it's about time in the market instead of time-ing the market.
Right.
And then you can just ride this out. But
Exactly. And I think for the majority of people, the vast majority of people, that is the best advice that you can give them. Don't invest with debt. Don't invest more that you can lose. And I'm going to take it one step further, because I think for 90% of people out there, regular retail traders, investors, you don't need to be buying individual companies. Just put your money into a low-cost ETF, into a low-cost index fund, and that's it.
Facts. What are those, though?
And so
Jaspreet. Most people don't know what that means.
So let's break that down. So an ETF is an exchange traded fund. And it is literally a group of companies, a basket of stocks. So instead of you going out and investing in, let's just say, McDonald's, the corporation, and now all your eggs are in McDonald's, meaning all of your money is in the investment in McDonald's. So if McDonald's goes up, you can make a lot of money. If McDonald's goes down, now you're going to be panicking because your whole portfolio is down. Well, the issue is you have the most upside, but also the most risk. Because if the executives at McDonald's run their company into the ground and they go bankrupt, your whole investment's gone. Now, if you invest into something like an ETF or an index fund, which are very similar to each other, now you have a group of companies where now it might be McDonald's and 499 other companies. So now what happens? You lower your risk, you lower some of your upside, but you also lower some of your downside. Because now if you run through that same scenario where the McDonald's executives run the corporation into the ground and they go bankrupt, well, you got 499 other companies in the portfolio, so you're okay. And so then what can happen in a low-cost ETF or an index fund is they have computers, and this is automated, where they will kick out McDonald's because now they're no longer fits within this 500 companies, and then they'll put in another company to take the place of McDonald's. So now it's passive on your end, because if you're not willing to put in the work to do that active investing, to do that sort of fundamental analysis, meaning listen to the earnings calls, study the revenue, study the profits, study what the corporation is doing. If you don't care about doing that, if you don't want to do that, and if you're not willing to do that, don't invest in individual companies, because now you're taking on all the risk, hoping for some upside. Versus you can mitigate a lot of that risk by just investing in ETFs or index funds, and you can do this right off of really any stock brokerage app out there, and now you can buy them. Now, how do you buy them? Well, two strategies, passively or actively. Passively, which is a great strategy, is now ideally every week or anytime you get paid, you put a little bit of money automatically into this ETF or
What
index
system
fund.
do you use for that?
So I use a platform called M1 Finance. There's
M1 Finance?
M1 Finance. There's tons of brokerages out there. You can find whatever one you want. Where now it is completely passive. Money is automatically pulled out of my checking account on Wednesdays. You pick the day, doesn't matter. And it's automatically invested
Known as
into
dollar cost averaging.
dollar cost averaging into my portfolio of ETFs. So I have a number of different ETFs in there. Happens every week, whether the market's up, whether the market's down, and I don't touch it. It just does its thing. The active side would be now you're looking for a good price point. And this is where it gets a little bit more advanced, where if you're willing to do the research, you can pick ETFs or index funds where if you see a big crash, you see prices go down, you can put more money in. Or now you can start looking for good companies that you believe are undervalued. But again, this now gets a little bit more advanced where you have
Can
to
I
be
ask
willing
you a
to put that work
really
in.
blunt and interesting question?
Yeah.
The average person, they're not financially literate. Would you rather, if they had $1,000, would you rather they play blackjack or try to actively trade that money?
Play blackjack or actively trade that money, don't trade. I think trading, unless you want to do it to learn, I traded. I'll give you my personal experience.
I know you would trade because you know what you're doing.
Well, I wouldn't trade. I would invest.
Even you wouldn't trade. Would
I don't
you?
trade.
Your only options: blackjack, active trading.
So explain that to me,
Average
because I'm
person.
not a casino person. So blackjack is the one where you go to 21.
Oh, you're going to lose either way.
Or you're going to lose either way.
The reason I bring this up is I really think that the average person would be better off taking their $1,000 to Vegas and playing blackjack because it will be fun. If you try to actively trade, you're going to lose your money. Now, is that 100% of the time? No, of course not. But Ray Dalio, for people that don't know, runs the largest hedge fund in the world. When he explains this, I'm like, oh my God, I'm never going to try to active trade. He said, you're going up against people like me. I spend whatever, $200 million a year on research.
Yeah.
And I have AI, which is making trades in milliseconds.
Right.
We know how fast the fiber optic cable is to make sure that our trades go through slightly faster than the other person, which can be the difference between, a percentage point, which could be millions of dollars. He was like, you're going to lose. And he was like, it's hard for us. And we've got whatever, 1,500 employees, like I said, AI that they've been building for the last 25 years, fiber optic cable, measuring things in milliseconds. He's like, the odds of you finding something that we haven't already traded on is basically zero.
Yeah.
Every person that I know, this is a very small sample size, I'm well aware of that. Every person that I know has lost money on a long enough timeline actively trading.
Yeah.
The only people that make money are people and I will use my language. This is how I think about myself. I am too stupid to beat the market. I'm too stupid to beat Ray Dalio. That's for sure. And Ray Dalio's entire team and AI and all that. So actively trading is off the table just because I know it would be like me trying to play professional soccer.
Right.
I'm going to get my ass handed to me by Messi. The difference between me as a footballer
Yeah.
and Messi is the same as me as an active trader and Ray Dalio, right? The gap
Yeah.
is so catastrophically large that at least playing blackjack, I would have a good time.
I think the difference is now differentiating active trading versus active
Yes,
investing.
100%.
Because trading, I tried trading one summer in college, and I spent every day staring at charts, candles, which are these little ways that you can make a stock chart, and you get glued to the screen, you get glued to the emotion, and it is very difficult.
Yeah,
And
watching candles is emotionally,
It's
addictive.
And so I stopped it because I realized I was never going to make any real money doing this. Active investing, what I mean by that now is you're looking at companies, and when you see this company fall because the whole world is getting scared, the whole market is tanking, well, now this is an opportunity for you to come in, buy a great company at a discounted price, and then you just hold on to it.
Now, would you do that at the company level or at the ETF index
Now,
level?
again, who is the person? For me, I would do it
Average.
at the company level. For
'Cause
the
like-
average person, do it at the ETF level. Because, again, you have to be willing to put in the work to research companies, keep up with the earnings statements if you want to buy and hold for the long term.
Are you doing active trading right now?
Not right now. But active
Sorry, active
investing.
investing,
Active
active investing.
investing.
My
I am not
apologies.
actively investing my money into the market. I'm passively investing. The reason why, for one, active investing means I'm putting my money into the market when I see a great buying point. Second thing is, it's now going to just my personal life. What is the best use for my money? Right? Invest my money in 5 places. My own business. I put my money into real estate, into stocks, into crypto, into physical gold. In this order. Right now, I see the most opportunity in my own business, market briefs. And so instead of actively putting my money into the
Sign
market,
up now. Your favorite thing you read every morning.
it's a great newsletter, right? So it's where we break down what's happening in the financial markets into a fun, really easy to read email. But for me, I see the opportunity there. It is the biggest purpose for me
Bet on yourself.
and the most excitement for me.
Yep.
So instead of me putting my money into the market, instead of me putting my money into real estate, which I love doing, I've been stopping these active investments and putting my money back into market briefs. That way we can build the company, build the infrastructure, build it into something bigger. And so that's
now,
where my
obviously, I
money's
knew
going.
the punchline, which is why I asked the question. But I want people to understand that you make a living researching this stuff, knowing about it, and even you aren't doing the active investing. You're doing passive, for sure, very wise, set that up. But for the average person, the odds that they will do better by trying to go in and saying, oh, I know where this is going well enough to know that now is a good time to buy
Yeah.
McDonald's, whatever. They're gonna have heard headlines about Tesla and
Sure.
things like that. And I'm not saying that there aren't moments that present themselves, but like if you watch Wall Street Bets, do you watch Wall Street Bets
I
on
don't.
Reddit at all? It's scary. You get these kids committing suicide because they don't understand like they'll do something where I forget if it's calls or puts or whatever. I am so not good at this. I
Yeah.
want people to be, I know my limits. But whatever it is, where there's an unlimited downside,
Yeah.
and so they end up owing like $75,000 all of a sudden, and they're like, what do I do? And so now they're just absolutely devastated.
Yeah.
So anyway.
So let's put trading out the
yeah,
window.
people have to be so careful. Oh my
Don't
God.
be trading, don't trade your money. And now when you're investing your money, don't invest with debt. Don't
Yeah,
invest
so
more than you're
I
willing
want
to
to go
lose.
back to recession.
Yeah.
I think this is a huge moment of opportunity. Even though I'm warning people as vociferously as I can about trying to beat Ray Dalio, I do think that understanding that if you're playing your cards right and you're not overextended and you've done what you're talking about, you've got your 5 buckets of investment, we're going to get into, remember to hang till the end because I'm going to give you the 8 things that Jaspreet teaches a lot. But if they're doing it well, this is Black Friday for assets. And if people think of it that way, like don't get yourself in trouble, don't be overextended, don't have debt. But if you think of this as Black Friday, there's huge opportunities. And this really is a moment where I want people to pay attention and take advantage of this moment. I am so hungry for the average person to get educated on this stuff.
Yeah.
Because I have lived the American dream. And I mean, not the like it's your house and all that, but that you can change classes. I grew up lower middle class and now I'm wealthy. And so I'm like, no. This is a set of ideas. If you get your head around the right ideas, like you can really win.
Yeah.
But you have to simplify. And because of the internet, because of meme culture, people get so caught up in the emotion.
Right.
It's the one thing you can't do.
Right.
And you have to be like stone cold logical.
You have to get that emotion out. And it's hard because everywhere you look on the internet, YouTube included, there's a lot of emotion. Now, I'm gonna be completely blunt, completely honest here, because I'm gonna talk about how the YouTube algorithm works, because I think we've talked about this before. I see this on my own platform where sometimes YouTube is going to promote certain video titles over the other. So let's talk about the market going down. If I say one YouTube title is the market goes down 3%. Here's what you need to know. Be prepared for market crash. What's going to get more clicks?
Be prepared for market
Be prepared
crash.
for market crash. Now, I hate that because I hate these titles. Now, you're going to say, Jaspreet, but you and every major YouTuber has titles that sound like this.
Oh, someone got to this video through a clickbait title. I
Someone
promise
got
you.
through this, right? and so now let's dissect this, because I have a team, and for a very long time they kept saying, Jaspreet, make these types of titles, and I refused. And what happened? Views went down like this. Now, I had a heart-to-heart with a couple people on my team where they were like, Jaspreet, listen, your videos are, I'm saying what they said, I don't want to sound like a super narcissist, but they were like, your videos have real financial education that people need to hear, and it's better than what a lot of people are putting out. And I was like, okay. They're like, if this title is what it takes to get people to learn what you're saying within the video, why not make it? And so it was one of those things where I was like, oh my God, I hate this, but it's the only way to provide that financial education, to get people to click it. Because if I can get you to click that video and now I can provide you real education without saying, oh my God, I need to panic and sell. No, understand the opportunities, be calm, look for the options. That's my goal. So it's one of those things where I see it because I'm in it. And I'm going to talk about market briefs for another second, because that's another driving reason for me wanting to create market briefs, because the internet is full of sensationalism, especially in the titles, because they need to get you to click. That's how just the internet works. It's the reality, okay? I mean, it is what it is. I have fought it for a long time. I hate it, but it's the reality. Now, the reason why I like market briefs and the reason why I'm so passionate about it is because we can completely separate ourselves from that, because now we are one email. We are, when it's coming into your inbox every day. It doesn't matter what the title is, because it's in the email. Once you open the email, everything is right there. And so now we can give you the actual news without any of that, that hypiness. And so that's the way, you and I operate. But there's a lot of people now that take it one step further, that even the news, then the actual content of the news becomes just super crazy sensationalist that doesn't make any sense. That's sometimes an outright lie, which then takes it one step further, where now you have to be able to dissect the crap, dissect the good. Because the reality is, if it doesn't have a quote unquote clickbaity title, you're never going to see it. It's never even going to cross your phone, your screen. It will be hidden into the depths of the internet. So now if you see it and it has a clickbaity title, the question is what's inside that content, and that's where you have to be able to dissect and dig a little bit deeper, understand if this is good and if this is not. And the general rule of thumb is that generally, when times are good, they're typically not as good as the media makes it seem. And when times are bad, it's typically not as bad as the media makes it seem. It's usually somewhere in the middle. And this is where now you have to really be able to understand and do that financial education for yourself now as an investor. But the best thing is, just keep investing your money, looking for those opportunities, but then also be able to understand what's happening, which is taking some of your emotions out of the equation. And so this is now kind of, building that financial education where it's difficult to do, but it's so important, especially in this day, this age, where the internet is our means of education, where accessibility is so much more, where anybody can invest and put their money into the markets. Anybody has access to these tools. Like, one thing that I want to mention is when we talk about building wealth, whether we're in a recession or not a recession, the majority of people, I think, assume that it's a lack of tool set that's stopping them from getting to where they want to go, when in reality, for the majority of people, it's a lack of mindset. Most of us have access to the tool set. It's just our mindset that's lacking. You don't need a ton of money.
What's the mindset problem?
The mindset is, one, believing I don't have enough money. I don't have access to enough tools. I don't have access to enough things to go and do it. That if I want to go and build a business, I need this, and this. I need $10,000. I need $100,000 to go out and do that. I need to have this type of degree. I need to have this type of parent. I need to have access to these types of people in order to go out and build a successful business. If I want to go out and invest my money, I need $10,000 before I can invest for it to be worthwhile. Why would I want to start investing with $10? What is that going to do? When in reality, these small investments do build up. If you are 21 years old today, and you start by investing just $100 a month, which is just over $3 a day, and you do this consistently until you retire, until you're 65 years old, 66 years old, and you can get an average 10% return on your money. That doesn't mean it's a 10% return every single year. It's an average 10% return over the course of investment, which is the average stock market return. You will retire a millionaire on that $100 investment, assuming you never increase the amount of money you're investing. And we're talking about less than $4 a day.
Whoa. That's $100 a month, not a one-time $100.
$100 a month,
Yeah.
less than $4 a day. You put $100 a month for the rest of your
40
life.
years.
And so even if you get a raise and you never put another penny into your investments, you will be able to retire a millionaire on the $4 a day that you're putting aside.
We're going to jump back into the video in just a second, but if you want to make better decisions with your money, you have to be aware of what's happening in the financial markets, and my free newsletter, Market Briefs, makes it very easy to do that because every day my team is breaking down what's happening in the financial markets into a fun, easy to read and witty email. Even if you don't have a financial background, in less than 5 minutes every morning, not only are you going to be aware of what's happening in the financial markets, but you're going to actually look forward to reading these emails. There are thousands of financial news stories published every single day. It's impossible for anybody to keep up with all the things happening in the financial news. That's why my team is researching what's happening every day, and then they're breaking it down. That way you're aware of what's happening in things like the economy, the real estate market, the stock market, the cryptocurrency market, and the global economy. And the best part of Market Briefs, besides it being free and you being able to win a pair of our Market Briefs for free, you'll learn about that as soon as you sign up for Market Briefs, is that our newsletters are brief. You can read them in less than 5 minutes every morning. So if you want to join Market Briefs for free, I'll put the link to how you can join down in the description below. Did you sign up yet?
So what would you say are the three biggest myths about money that you've debunked over your time of learning about money, that maybe you grew up thinking it was one way, like you were talking about loans and banks and all these different things? What are three myths about money that you've found out were not true?
Well, the first thing that I would say, I don't know if it's a myth, but I would say that the first thing everyone has to understand is what money is. And I don't mean in terms of in terms of wealth, but like money is just paper. It doesn't make you a good person. It doesn't make you a bad person. It's paper. And we talk about all these insecurities people have with money. I grew up being told, don't talk about money, don't worry about money, don't stress about money. Yet here I am seeing my parents work their butt off every single day. So
Trying to make money.
And it doesn't make sense. How am I supposed to not worry about money? And you want me to become a doctor because you read those, if you go to those career fairs, they show you the different careers, right? And doctor is always number one, the highest income. So why am I doing this if it's because of the income instead of because I love it or do something that I love? Why not?
Or because I want to help people.
Yeah.
You want to save lives.
Exactly.
Yeah.
And what's crazy is if you understand money, you become financially educated, you're willing to talk about it. Well, now you can be financially stable doing whatever you want. And you can follow something you love and still be financially okay because we assume that you have to have this in order to make money. You have to have this job in order to make good money. You have to have this career if you want to be financially stable. But that's a complete lie.
Yeah.
But that goes down to not us being willing to talk about money. And I talked about this in our last interview. But money is one part of our lives. And the reason why people are scared to talk about it is because we're insecure about it. And that's because we don't understand how money plays a part in our lives. It's one aspect. I say that there's four. You have to be physically healthy, mentally healthy, spiritually healthy, and then financially healthy. If you're not financially healthy, well, it can make everything else much more miserable because you can't pay your bills. But if you're financially healthy, you're rich, but you have nothing else, more money just makes you more miserable. So you need to live a holistic life and understand how money plays a part in your life. That way, the finances can have the biggest power. And then you understand that more money just amplifies who you are. It's like fire. It's like fuel. It fuels your fire. If you're a good person and you have more money, you have a tool to do more good. If you're a bad person, you have more money, you have a tool to do more bad.
Yeah.
Just why we need more good people with money.
Exactly.
How do we do that?
Well, yeah,
Get educated.
A lot of people just say that money exposes who you really are.
Exactly.
It amplifies who you are.
Right.
So people can see, whether you're that good person or a bad person or whatever it may be in between. But first off, understanding what money is what you had to learn. It's kind of like this thing. What else around understanding it would you say?
So
Maybe you thought it was one thing, but then you realized it was something else.
Exactly. So now that's money. The second thing is, how do you use money and value money? Because I'm going to say this in the nicest way possible, but traditionally Indian people can be very cheap. Okay? And, I grew up seeing this. And what does that mean? It means that the traditional Indian house is a save-heavy culture. And I can say that because I've seen this and I grew up in that, where you make $1 to spend 20 cents. And the traditional American culture is you make $1 to spend
spend
$2, right? And so it's a save heavy culture. So you're spending as little money as possible to save it. Now, obviously we talked about inflation, so I'm not going to mention what that means with savings. But what I'm talking about here is you can use your money as a tool. And this is what wealthy people do, because now what do they do with their money? You use your money to buy your time back. Because what so many of us do is we're exchanging our hours for dollars. You go to work every single day and you get paid, but what are wealthy people doing? They're not working just to use their money as a way to buy hours. They're using the money to buy their time back.
Yes.
Because now you can build things and build processes and invest your money, because now you can use your money as a tool instead of as a fool. That's what I like to say. But this is where it's how do you now use your money to make your life better?
Yeah.
And you don't want to be now just buying a whole bunch of Gucci and Louis Vuitton. It's now actually improving your life. And
Not to make your life look better, but to actually improve it from the inside out.
yeah. So the simplest example would be you start a YouTube channel. We talked about buying a camera. Well, one thing that you could do is you can hire a video editor. You go on a freelance site, hire a freelance video editor, and now what are you doing? You can spend more time making more videos instead of spending all your time editing the content. So you can focus on your time. You can hire someone to mow the lawn. You bought your time back. You can hire somebody to help get you your groceries. You buy your time back. It costs money. You have to spend money in order to do that. But you're getting something in an exchange. And now you're buying your time back, so you can use your money as a tool. And you can use your money as a tool to buy your time back, or you can use your money as a tool to make you and attract you more money. That's what wealthy people do. And so you want to be able to use money in that way. The third thing would be now to really, I know I talk about this a lot, but you have to understand the difference between something that makes you money and something that loses you money.
That's a liability, yeah.
A liability. And
what are the main liabilities that people spend on today?
The way you look, man. We have this Instagram flex culture, right? And it is very toxic if you do not know how to use it.
And unless you're investing your money wisely and you've got excess money and you're like, okay, I want to buy some stuff to flex, cool. But
There's
if
nothing
you're not
wrong.
investing your money
Yeah.
and you're just spending it on clothes and watches and shoes
If you
to
got,
look good,
if
then
you
it's
got the
like,
name brand stuff, but you got no savings, you got no investments, you're doing something wrong. Your priorities in the wrong place. What are you doing? You're making Gucci rich, you're making Louis Vuitton rich, you're making all these companies rich, but you're keeping yourself broke. When I talked about my watch, I spent $1,000 on a watch. I had no investments. I didn't even know what an investment was at the time. I didn't realize I could have taken that $1,000 and invested it into a watch company and get a share of the profits. But that's how wealthy people are doing, and they understand that. And there's nothing wrong with spending money. There's nothing wrong with having luxuries. There's nothing wrong with having the nice things.
yes.
But it's a matter of when can you actually afford it. You have to know when the right time is for you to have it, because you want to first make yourself rich, and then, hey, blow. If you can afford it, do whatever you want.
Grant Cardone is always talking about how he doesn't spend money on the cash he makes to buy watches or things. He only spends money on the watches and clothes and things on the passive income.
That's great.
From his investments.
You take the earned income, you're working every single day. You take this income and you use as much of that as possible to invest into assets. The assets pay you, live off of the assets, because now those assets don't need you to go to work every single day to get paid. So if you break your leg and you can't get paid, you're not getting that earned income, but that active, the passive income from your assets still coming in. And now if that's the money you're living off of, you are free. Your earned income is just buying you more assets. And so how do you start that, right? And so this is where you have to kind of build some sort of system for yourself. And the rule that I would always say is follow something like my rule of 5. If you can't buy 5 of them, you can't afford one of them.
Yeah.
So it's, you want to buy a $1,000 phone, you want to buy a $1,000 watch. Okay, fine. Can you buy 5 of them? And if you don't have the ability to buy 5 of them, if you can't afford to do that, then you can't afford one. If you can't buy 5, you can't afford one. And then you want to create a system, like a system that automates your finances, where now you have something going on with your money that is putting your money to work no matter what. And so one of the easiest things, you can create your own, is to follow something like a 75-15-10 plan, which means that for every dollar you earn from now on, 75 cents is the maximum you can spend, 15 cents is the minimum you're investing, and 10 cents is the minimum that you're saving. Now the savings is, you want to build somewhere between 3 and 12 months worth of savings if you want to have that protection. 3 months if you don't have a lot of liability, a lot of responsibilities, you don't have all that going on and you have a high risk tolerance, 12 months if you want to play it safe. You figure out what's right for you. After you filled your savings, you fill up the savings. You don't want to put any more money into it because now you're just being eaten away by inflation.
Yes.
Right? The savings is not there to make you wealthy. It's there just to protect you against an emergency. Then what you do is you take the money, put it into your investments. And now you just keep investing money. Now what happens is as you grow your income, you don't change this ratio. So if you go from $40,000 a year to $400,000 a year, you keep the same ratio and you're still investing first. And then you keep saving your money, and then you know how much you can spend. Because now what you're doing, which is what wealthy people do, is you invest before you spend. The way that the finances look for the majority of people is you make money, you pay taxes, you spend your money, and then you wonder where your money went. Well, wealthy people do, right? Wealthy people are, you make money.
Especially in California.
Yeah, $7
taxes.
gas and high taxes. But what wealthy people are doing is you make money, and then depending on how you make it, either you pay taxes first or after, ideally after, because there are ways to do that legally, but you make money and then you want to invest as much as possible and then you spend whatever's left. So wealthy people invest and spend what's left while the majority of people spend and invest whatever's left.
Here's one that I think a lot of people do, and I think it hurts them in a big way. How does someone not make their net worth attached to their self-worth?
That's a good one.
Meaning, how do they believe in themselves, have confidence, have love for themselves when they're not making that much? Maybe they're in a transition. Maybe they lost their job. Maybe they're just starting out.
Sure.
And how do they also, when they start making some cash, not tie their bank account number to their self-worth?
So when you fail at something, you don't become a failure as a person. You failed at a task. And in order to become successful at something, you have to fail at a lot of tasks. And so the first thing you have to understand that about yourself is that just because something didn't work, just because you failed at something does not mean that you are a failure. Maybe you failed at a task. I failed at a ton of things. I'm sure you have to. You have to screw up a lot. And that's how you find the good. So now when it comes to net worth, if you want to be completely honest, your net worth is pretty useless. It's a worthless number. It means nothing. It means less than nothing, because what is net worth? It's a paper number. If I have $1 million net worth in the stock market today, tomorrow it could be worth 400,000. It doesn't. If you are valuing your life, and even worse, if you are spending based off of your net worth, you're living a very dangerous life. And some people do this because they say, "Oh, I'm worth $1 million, so I'm going to go out and live $1 million lifestyle." You don't have $1 million. You're just worth $1 million. You don't have income coming in. You're just worth this amount of money, and so you go and borrow a ton of money and you start living this $1 million lifestyle, and then things go down and now you're the first one to lose your shirt. So the thing that I want you to remember is, first, regarding the failure, you're not a failure. Just because you failed at a task does not mean you're a failure. It's actually a good thing you failed, because that means you're one step closer to finding that success. And then second, regarding the actual net worth number, look, this is just temporary. Everything is temporary, and you have the opportunity to build something a lot bigger. You have to have the right mindset. And if you are here in America, you're in a first world country, you have the opportunity to do that. But you have to be willing to learn and be willing to give it time. So you have to be patient, but also impatient at the same time. Patient in the sense that you have to understand that get rich quick is majority of the time a big scam. It doesn't work. It makes the people selling the get rich quick rich
and you
keep you broke. So the first thing you have to understand is that. But then second is you want to be impatient, where it's going to fuel that drive, fuel that work ethic, fuel that discipline, and you have to be willing to keep going. If you would have told me 15 years ago or 10 years ago, hey man, you're going to be interviewing with Lewis on this show, I would never thought that's possible. I grew up being told, somebody like me can't do this. I remember talking to my own family members that you can never be a CEO of a company. Somebody like you can't do that. You have no business background. You couldn't even get into business school. And it's funny, and nowadays I'm like, well, there's a lot more value to being the owner of a company than the CEO of a company, because the CEO is working for the owner. But anything is possible. And even if you just ignore the financial side, you can do anything you want. But you want to be a singer, you want to be an actor, you want to be an entrepreneur, you want to be a CEO, you want to be whatever you want to do. It is possible, but you have to believe it and you have to be willing to put in that work. Hard work beats talent when talent doesn't work hard. That is the truest saying that you can make, because I have, I worked in the event planning space. I still know a lot of people in this space. I know a lot of people that manage singers, big time singers, especially in the Indian space. And some of these people are incredibly talented with no drive, no work ethic. And where are they going with their careers? They had this spike and then going down. I know these other people that are average singers, but they're putting out songs day after day after day. I mean, if you heard them sing, it's like, it's whatever, but
you can produce it well, you can make the hooks, you can write cool lyrics.
Keep improving, and they keep putting out content, and they keep improving every week. And it's like, dang, you got millions and millions and millions of views.
It's funny, man. I got a friend of mine I've had on the show, Andy Grammer, who was literally in Santa Monica busking for 4 years, 5 days a week, 4 years, playing songs for just tips on the streets.
They hustle, right?
But I think he said he wrote like over 1,000 songs or something crazy like this in this 4-year period. He would sing the covers to try to get like people to come around and be like, I like that song, let me give you $1. And then he would throw in one of his own original songs to try to get people like, oh, he got his own stuff. But he did this for 4 years before he actually got something that was on the radio and then touring and all these other things. 4 years on the streets, just
amazing.
Working really hard. Now he's got momentum, but he's got all these skills now developing over those years to write his own songs.
And I don't think people realize what 4 years means. Because you hear 4 years, college is 4 years, high school is 4 years. But you got to remember, during those 4 years, that's a long time. You go from January, February, March, April, May, you do it again,
every day.
and again, and again, and again. Steve Harvey, I love his story because he went through the same thing. He was homeless because he was like, I'm a janitor right now. I want to be a comedian. My friend, who I grew up with, is now on TV. We both had the same dreams. I didn't want to say it. He got laughed at for his dreams, and now he's the one on TV living my dream, and I'm working as a janitor. Quit his job, moved into his car, and spent 3 years just trying to make it. Look at him. And he's on shows after shows after shows.
He's crushing it.
It's that discipline, being willing to put in the work and just sticking with it is so hard, and that can help you in any, forget the financial side, doing something you love, living a purposeful life, because what's important to you is not what's necessarily important to me, and what's important to someone listening to this is going to be different than me, and we all have a different passion, a different purpose, and a different mission. And so someone's going to care about climate change, someone's going to care about world hunger, someone's going to care about cancer in kids, someone's going to care about breast cancer, someone's going to care about financial education. And so we all come at this world with different experiences, different pains. And each one of those pains are going to drive our motivations. But you have to be willing to work towards it, because if you don't, who else is going to?
Yeah.
And you have to be willing to do that if you want to make that impact.
What would you say on a scale of 1 to 10, how much you love yourself today? 10 being you have ultimate love for yourself, and not in an egotistical way.
Yeah.
1 being you hate yourself. Where would you be on the 1 to 10 scale?
I think, I don't want to be like mean, like I'm like overly narcissistic, but I love myself. And I never asked myself that question because I don't think, I was very fortunate that I never really had to struggle with happiness.
Really?
No. And
even when your parents were kind of talking the way they did?
That was tough. It was tough, but it never really made me unhappy, because I think why is I had a group of guys that I was friends with, a few DJ friends, and we were all kind of like, almost like rebels, but we knew we weren't doing bad things. We're like, we want to become successful, just no one sees our vision. So we all just kind of like, we were friends. I had a really good community, and I think that really helped me, because sometimes I would go sleep in their basement. I was like, man, this is like, my mom told me this, or my dad's not believing me. And they were like, and they were in the same boat as me. Like, they're like, dude, I don't know what I'm going to do either. And look, all of us now are doing very well. And we joke around about that, where it's like, man, I got a lot of trouble with my parents. I'm sleeping in your basement. Now you come into my basement. And so it was tough, but I had a lot of fun along the way, man.
Yeah. So money, you never attached money to happiness.
Never. I think actually, I think more money actually maybe have reduced potential happiness.
Really?
Yeah, and I think the reason why is because some things had happened in my life that I did not expect. And I thought, because we were all like, we want to become successful, but we loved the journey. Like, we were having a great time. But I think what happened was I had some like really tough realizations, and I've never talked about this publicly, but I'll do it now. So when I was, Minority Mindset was growing, and I was like, I'm going to really build this now. And we were getting close to 100,000 subscribers, and we were going viral, and it's like, wow, we made it.
Yeah.
We were about to hit it.
100,000 is hard to do. That first 100,000 is really hard.
And I was right about to hit it. And I come home, and we were having dinner, and my dad, I knew something was wrong, and he looks at me and he says, your mom has cancer. And all of a sudden, it's like, forget the YouTube channel, forget the investment, like forget it all. Like I was like, are you serious? I was like, did you get a second opinion? And you know, it was very tough. And so the next week, my mom's in the hospital in the operating room, and it was the day after I had 100,000 subscribers, the day after our operation, and it was like, it was nice to see, but it was like, I like that I'm making an impact, but honestly, it doesn't even matter. Like I would give this up in a second to make sure my mom is okay. And just, I think that that initial realization was like, wow, like there's so much more to life than just money. And you know, I think that's when I started developing. That's when I developed the quadruped triangle: the physical, the mental, the spiritual, the financial. Because I was like, I started writing my thoughts down. I was like, you know, this is you start to really place a value on different things.
Absolutely.
And you start to realize, okay, I was spending a lot of time in my work, and I still work a lot, but you start to realize that, you know, I need to spend some time with my family. I need to do certain things. I need to make sure that I take care of myself, and I need to make sure I take care of my family. And those were, you know, my mom was okay. She beat it. It was great. Good. It was amazing. Like that was like the biggest relief. But you learn from your struggles. You learn from pain, and that, I think that realization probably was like, you have to. Money does not make you happier, but what it can do is it can make your bills a lot easier to pay. It can make vacations, like it can make your life more. You can do more of the things that you love.
You have more choices, more options.
Exactly.
But you still have to work on happiness.
You have to work on. It's a completely different game.
There's so many people that I've interviewed in the last few months that have had kind of this rise to success over the previous, let's say, 3 to 5 years. And so many of them said, when I asked them on the scale of 1 to 10 of their happiness and self-love, that they were higher just right before they started to hit like this growth period, like right before they kind of became famous or made a ton of money. They were higher right before than they were now. Not to say they weren't still happy and loved themselves, but many of them said it was the pressure to continue to grow. This exposure, all these people know about me, and I'm getting judged and critiqued for my message or my content or my actions. And this kind of fear, what if I lose it? What if it goes down? So it sounds like you kind of had that.
Yeah. So I think I have a little bit of a benefit there, and I'll tell you why. Because I do notice that pressure, where, you know, people, they recognize me, which is amazing, and I hear some of these stories, and I'm like, I don't want to screw this up. But I think part of the reason why I'm a little bit detached from that same pressure is because I don't need my income from YouTube. So I don't have to portray a certain image or act like a certain person. I can be me. I can be silly. Like, you watch my YouTube channel, I say the word below, very funny. It's just the way I talk. I talk about guacamole because I love guac. You know, I go to Chipotle, I get my extra guac. So I am able to inject my own personality. And if you don't like it, I really don't care. You know, you can leave. I'll still be okay financially. And which is why I think also I can talk about things like, I'm not here on my YouTube channel. And I think that's also contributed to my growth kind of. It's funny how it works, where like, I don't have to sit here and make certain types of content. I think I did go down that route for a little bit, where I was like, oh,
trying to hit the trends.
Yeah, you start to hit the, and I went down that right, and it was like, you start to do things you don't want to do because you're like, oh, this is what the algorithm wants. This is what is going to make people happy. And you start doing it for the wrong reasons. This is what's going to make my sponsors happy.
Right.
And I did that for a while, and I was like, you know what? This is not me. And I stopped. And I was probably like 500,000 subscribers at the time. So it was, you know, pretty, you know, I was making good income, and I was like, you know, screw this. It's not me. And so I stopped that. I put out the content that's more genuine to me. I'm going to talk about the things that I want, things that are important to me, things that I like talking, the way I like talking about it. I'm going to be silly. If I want to dance in a video, I'll dance. You know, and I love my fans. I love our followers. I love our subscribers. Like, they're the greatest subscribers ever. I just had a small meet and greet here in San Diego. I talked about it weeks before the event, and I stopped talking about it. I just kind of put it out there because I've never done anything like that before. It was a huge success. I mean,
really?
I could not believe it.
How many people showed up?
Over 100.
Wow.
And I mean, we had shut down Little Italy. I don't even know how many came. I don't
That's
even
cool.
like if it was more. There was so many people, and people flew down to see me.
Wow.
People drove 8 hours, and I was like, "Are you serious? Like
Wow.
you guys?" I mean, it was amazing, and it was like I'm not. I don't need to sit here and act. I don't need to sit here and be someone I'm not. Look, I'm gonna talk the way I am. I'm gonna wear the clothes that I wear. I'm gonna be like me. I'm gonna act like me. And if you don't like it, I'm sorry. You know, I do this for me. I don't do
Yeah.
this for you. And I think people have appreciated that because they realize that I'm coming from a genuine perspective. Where it's like, look, I'm obviously it's nice. You know, I get an income from it, which is great. But my livelihood is not dependent on it.
No.
If my YouTube shut down, I'm not going to be homeless. I'm
Sure,
going to be
sure.
okay. So for me, it's a way for me to get my message across. It's a way for me to talk about my business, market briefs, talk about the things that I'm working on. And it's a way for me to really just connect and talk about the things that I wish I knew. So I think that has helped me in that happiness side where I could be me. But I think I've also started to identify, like, you know, happiness is something that, like, it's almost like not something you look for. It's just you're happy with it. And I'll give you an example with it because I think a lot of people thought it was really weird when this happened. So this is like before I used a credit card. I used to really be this big cash person. Oh, credit cards are bad. Now I only use a credit card. But before I was like, credit cards are bad. So I used to keep this like fat wallet.
Now you only use a credit
I
card.
only use a credit card. But back then I used to have this like fat wallet and I used to have a bunch of cash in there. And I had the cash stolen out of my wallet a couple times, right? It was a few $100s, and you know I was younger at the time, so a few $100s was a lot more significant.
Yeah.
And I remember my friends were like, "Dude, like, aren't you angry?" I was like, "Man, look, the person who stole it probably needed it more than I do. It is what it is. So yeah, it sucks. We're like, what am I gonna just cry about it, beat myself up?" I think I remember my mindset changing on this when I was maybe in middle school. My uncle sent me this email. I've been trying to find this email, but I can't find it anymore. And they gave the story about why you shouldn't cry over spilled milk. And the premise was, it was this kid who was making cereal, spilled the milk, and now he was so angry. He was so angry about it. He got late for school or work. He gets in his car, now that he's late, he starts speeding. And now he gets into an accident. Now he gets even more angry. He gets into an accident, somebody else gets injured. Now he's even more upset, now he's late for work. And now he gets into work after the person's injured, he has to deal with that. And then he gets into work, and then he gets fired because he's late. All because of the spilled milk. And it's like, if you didn't cry over the spilled milk, it's like, yeah, it's just a little bit of milk, you pick it up, you go to work, you're on with the day, and nothing else goes wrong. And it's like, wow, it's a big shift.
Yeah.
But along the way, I've realized that, you know, I've been talking a lot more about mental health a little bit on our channel because I have become much more aware to it. I'll be honest, I was very ignorant to mental health for a big portion of my life. Very dumb about it. Where, you know, I was like, I kind of grew up with this, like, yo, depression's fake. It's not real. And then, you know, everybody has a turning point, right? You start to see pain. And then I started to see it in people around me, people very close to me. And you start to see the impacts of that. And then you start to realize, whoa, like, maybe you can't break out of it. Because now I started learning about it. I started reading articles about it. I started listening to podcasts about it. I started listening to YouTube videos about it. I was like, oh my God, like, I don't understand this. And then, you know, I had lost some very close friends to it. And
To depression.
To depression.
Wow.
They took their own life. And that's when, you know, it's like, this is serious.
Becomes real.
Becomes
Yeah.
real. And I'm like kicking myself, like, dude, you're so dumb. How could you think that? And you start to, you know, you realize that there is a big importance in that, which is why, you know, again, going back to the quadruped, the mental is so important. If you are anxious, if you're depressed, and you know, and it starts at an early age. It starts, you know, from your childhood. And obviously, I'm not a brain expert. You know, you've interviewed the top minds in this, but you know, it starts at an early age, and which is why, for anybody, it's important to learn about it because if you're going to have kids, learn about this. You know, you want to know physical, mental, spiritual, financial, so you can teach this at a young age. Teach this to people because we're never taught these things. And
Absolutely.
if you just have to go and figure it out, guess what? You don't want to be on the losing side of any of these. So, you know, on that side, be willing to invest in yourself. Whether that means talking to a therapist, whether that means checking yourself into a rehab, even if it's expensive, go in and check yourself in, find whatever help, whether it's alternative help, traditional help, go and find help. Get the help. That way you can take care of yourself, because if you can't get out of it now, it's going to become more difficult. And if you think that more money is going to solve that problem, you are going to be even more miserable, because then you're going to realize that you were wrong. And then you're going to feel more hopeless, because you're like, I did this to solve this problem, but it paid my bills, but it didn't make me happy.
Yeah.
And now you're going to feel so much worse.
Right.
And I've seen it, because look, in my culture, a lot of people in this first generation, we've gone through a lot of similar struggles where parents are working hard. And so you don't get to spend a lot of time with your parents. You see a lot of trauma in the household. And it starts to come out when people start to work. And I start to see all these issues on the mental health side of things. And it's still a taboo topic in my culture.
Yeah.
Mental health is not something people openly talk about. Well, we need to. And it's one of those things where, dude, people are taking their lives. And we're still scared to talk about it. And this is why, I say, look, learn about it. Be willing to invest in yourself. If people don't support you, just be willing to spend and do whatever it takes.
And what I do know is that money might help in some ways ease some pains, but it doesn't ease every pain. There was someone, I was in a building 2 years ago, living in a building here in LA. Someone was worth $500 million that took their life. And so it might solve money problems, but it may not solve depression, anxiety, stress, mental
different.
health problems, self-love problems.
Exactly. They're different layers,
Yeah.
right? They're made of different ingredients. Right?
Yes.
Go back to the cake example. I love food, okay?
Yeah.
So it's different layers made up of different ingredients. When this is not too long ago, I was in Sacramento. I did another interview over there. And I got there a little bit, I landed, and I got there a little bit early. So I went to Chipotle.
That double guac.
Exactly,
baby.
the double guac. And I'm driving into Chipotle, and there was a lady there with a sign that said, please help, I need food for my kids. And her two small kids, probably like 5 to 7 year old, were sitting there. So I parked my car and I was like, well, I have some extra time. Let me go see if I can buy them lunch. So I go up to her. She didn't speak much English. And I said, can I buy you lunch? She didn't understand. So I tried to like explain it with like hand signals. And she was like, oh, I would love that. And I was like, well, I got time. I was like, what about, it was in the same plaza as a grocery store. I said, can I buy you groceries? And after I got that across, she understood that. She was like, oh my God, like, yes, like, please. And I said, okay, let's go inside. I'll get you whatever you want from the grocery store. Buy whatever you want. Her two kids get up. She explains it to them in their native language. And they start jumping in joy. And I was like, when was the last time you got excited to go to the grocery store, right? It's just normal. And so they go inside and they're shopping, and I could just see the happiness. They're like, oh, we're buying vegetables, we're buying eggs, we're buying some milk, we're buying some meat. And the kids, like, at some point, were literally like, oh, can I buy this chocolate bar? And they start jumping, like up and down, jumping with joy. And they get to the cashier, and I don't get emotional often. And I remember seeing that, and the kids were coming up to me, and I was getting emotional sitting there looking at this. I had to turn around. I just started blinking. I was like, it was just so sad, where it's like, that in that instance, money would make a big difference. And I know, and I can talk about my culture because I've seen it. And I know a lot of people, people even in my own family that seen extreme struggles. And in that moment, money will solve a lot of problems.
Yes.
It will make your stress go down. It will feed the family. It will feed the kids. It will make you pay your bills. It will pay off the debts. And that stress, the financial stress, will leave. But then you have to also look at the physical, the mental, and the spiritual. And this is where I am not a mental health expert. I'm not a physical health expert. I'm not a spiritual health expert. But I understand that it's important in my life because I've seen the importance of it. But I think I understand money. I don't like calling myself an expert. I hate when people call me a guru or an expert. Even when I go on the news, please don't call me an expert because I'm learning every single day. But I'm learning every day about it. And I think that education is where I can help. And this is where that lack of financial education is just so deep rooted. And I said this last time, I'm going to say it again. It's because it is so profitable to keep you poor. It's profitable to keep you financially uneducated. And it sucks, but it's the reality. So what do we do now? Get financially educated. Because at the end of the day, Money speaks.
Yeah.
Money talks. You can hate it, you can love it, but it's the reality. You know what? People listen to what I have to say now. Why? Because I got money. You know, it is what it is.
Yes.
You know, it's like gravity.
And there's some credibility to it too. You know, it builds credibility, authority, trust, all these different things.
And I hope that, you know, through my genuineness, I've been able to build that.
Yeah, man.
But, you know, I talk about the system like gravity.
Yes.
It is what it is. You can fight it or you can understand it. Learn the rules to the game.
And leverage it.
Learn the rules to money. Leverage it, use it to your advantage. Because either you're going to use it to your advantage or you're going to get used to somebody else's advantage.
Snap.
If you're like most people, you grew up wanting to become wealthy and financially successful and rich, but chances are, if you're like most people, you didn't grow up learning how to do that when you were in school. And when you don't have this base financial education, then you're more likely to fall into money traps that keep you broke and poor, which is why in this video, I'm going to be going over 15 money traps that you want to avoid.